This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Yes, we have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
It's not a silver bullet. What we need surveillance to be stronger.
The next 6 months in the Northern Hemisphere will be very tough.
It might be a little bit accelerated, but I don't think that is going to be a game changer.
In practice, it is dealt with by each country largely autonomous.
Okay, I'm placing an order to sell short euro at 118802. Okay, order placed.
Out there on this pandemic, Bloomberg has put together a resilience index, and it is really something to see the countries that have their act together and the countries that do not. No surprise really with the names for those that have been following this. But New Zealand, you know, and so much of this is almost a geographic removal. And yet Asia does better. Great to talk to the former Prime Minister of Finland, Mr. Butts, the other day as well. And then those that are challenged here, and I do want to make a point that so much of resilience is based off case analysis, which even our Sam Fazili says is a little bit shaky. I look much more at death dynamics, and hospitalizations, of course, have come front and center here in the last number of days. Amesh Adalja joins us now with Johns Hopkins Center of Health Security. Thrilled that he could be with us today. We talk about resilience, Dr. Adalja. Resilience comes from policy. Which nation seems to be most supple, most malleable at reacting to this pandemic and initiating constructive policy?
I would say that has to go to Taiwan and South Korea. These countries have been able to do, they were able to do in March and February what we can't do even in the United States now in November. And they were able to meet cases as they came because they had a robust policy of trying to interdict very early and being very proactive versus reactive. And they sprang into action very early. South Korea and the U.S. had their first cases on the same day. And just look.
Position open, short position at 118802.
Facing the consequences of that now as we enter these cold months where this virus's transmission is accelerating.
Amish, I want to talk about the vaccines in a second, but first, is there a danger that poorer countries just won't have access to the vaccine, to any vaccine, quick enough?
I do think that's going to be the issue, and it's always the issue during an infectious disease emergency, where you find a disparity between the developed world and the developing world. And we saw that with 2009 H1N1. We still see it with vaccines like measles and polio. So this is going to be a major issue. One of the issues is also the fact that one of the vaccines, the Pfizer vaccine, requires an extreme cold chain, which is going to be hard to keep intact when you're talking about the developing world, where electricity may be spotty and we have difficulty even with refrigeration. So I do think that this is going to be a longer endeavor when you're talking about the world. The developed world may, mid-2021, have enough of their population vaccinated to have COVID-19 cease to be a public health problem, but it is going to be a challenge for many other parts of the world, and that's what the Bill and Melinda Gates, that's what the COVAX consortium, all of these other entities are trying to assure won't happen, but I do think it's going to be hard going for many of those countries.
Dr. Adalja, how much, are we focusing too much on these vaccines and the fact that a lot of these vaccines are coming even quicker than expected and not focusing enough on hospital capacity, especially in the U.S.? How critical is hospital access right now?
For the next several months, hospital capacity in the U.S. and around the world is going to be the major factor because these vaccines are going to be coming, but they're not going to be available in big enough quantities to make a dent on all of the patients that are already hospitalized. There's around 80,000 Americans hospitalized now. That's something that we have to get through, and it's going to only continue as we go through the Thanksgiving holidays and we see that expected surge that's going to occur.
Right.
So this is something we have to think of these vaccines as lights at the end of the tunnel, but we still have a lot of tunnel to go, and a lot of people are going to die between now and the vaccines, and a lot of hospitals are going to be worrying about capacity long before the vaccine starts hitting the arms of Americans.
Dr. Adalja, would you get on an airplane this Thanksgiving holiday?
It's not actually the airplane itself that's the danger, because everybody is masked there and they've got a lot of mitigation. It's what you do when you get to your destination. That's the problem. It's not the conveyance by the airplane. It's
stop on profit at 118.78.
It's just what people do when they get to their where they're going.
Dr. Adalja, thank you so much. An update from Johns Hopkins here as we go into the holiday week, I should say. Of course, more there are. Terrific virus update, really quite good. She is the lieutenant governor of the Empire State, but Kathy Hochul is much more than that. She has a terrific perspective, not in the big urban areas, but the sprawl of any given state, including her, Western New York. In the 7 o'clock hour, Kathy Hochul. Stay with us. Futures up 28. This is Bloomberg.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. Tom and Francine from London and New York. The focus on some of the haven assets. Let's get straight to your data check. Global stocks are actually advancing for a second day. Investors cheering the start of the U.S. President-elect Joe Biden's formal transition, but also prospect for more economic stimulus. Now, I'm looking at energy stocks. They're definitely leading the Stock 600 index higher. Travel companies, banks also notching gains. EasyJet and ICA Group rising after England also cutting its quarantine period for arrivals from high-risk countries. Now, haven assets, broadly weaker. Bitcoin, though, extending its searing rally, surpassing some $19,000 for the first time since 2017. Strategists on Bitcoin and crypto fans alike seem to be rushing now to project its next record. Forecasts really varied from 25,000 to even 300,000 by the end of the next year. So take with a very big pinch of salt. Coming up, more Bloomberg Surveillance.
I'm moving stop on profit to 118.752. Okay.
For each side to understand the sensitivities of the other.
Former U.S. Secretary of State Henry Kissinger said the incoming Biden administration should move quickly to restore lines of communication with China that frayed during the Trump years, or risk a crisis that could escalate into military conflict.
Unless there is some basis for some cooperative action, the world will slide into a catastrophe comparable to World War I, with a technology that is even more difficult to control than the technology of the period then.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Scenario from our targets would be if the unemployment rate in November will begin to go higher.
Even before the pandemic, we had a lot of frailties.
Equity volatility and equity uncertainty still remains elevated.
I think we will have weathered the storm, and I do hope that the worst will be over by next summer.
We may experience a bit of a dip economically.
It isn't as much a risk of a double dip. It's a risk that we extend the rebound.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Tuesday morning, equities positive 0.7%. Tom Keene, Janet Yellen widely tipped, widely reported to be America's next Treasury Secretary.
Good conversations. I think Bloomberg really out front in this story. Talking to Jason Furman, who was across from Chair Yellen years ago at the chairman of Council Economic Advisors, but many other voices as well, John. It's going to be fascinating to see what she does in a very different job. The headline is she has to deal with Congress and the Senate.
And she's conditioned by the experience of the previous cycle, and I think that's really important, Tom. This is about avoiding a premature declaration of victory, and Chair Yellen has lived that, and I'm sure she won't want to make the same mistake twice.
Well, we'll see here, and there's many other announcements to come. I'm frankly, John, I know it's away from what we do here on radio and television, but I'm really focused on the Department of Defense after the chaos we've seen over the last number of weeks, so that'll be an important announcement as well. But, John, there's many, many others, and the backdrop here is maybe the clearing of uncertainty, and look where the markets are moving.
3,600 on the S&P 500. I know Dow. What is it, Tom? Dow what? 30?
Dow's over 10,000, John. 29,831. The Dow is up 64% off the March bottom. On a log chart, it's actually a very elegant chart with all sorts of good features. And, you really want to, within the debate of those good conversations opening the show, John, you really, really wonder what the next leg is. And that's a huge debate into the Thanksgiving holiday.
Well, yesterday the small caps outperformed, and that's where the money's been going over the last couple of weeks. Lisa Brown, it's the reality of the moment, though. We can't lose it. Look at the headline that's just crossed the Bloomberg. Airlines see pandemic losses reaching $157.2 billion across 2020, 2021. A lot of work still to do.
There's still a lot of work, and this really raises the question of what Janet Yellen will do. And I will say, just to follow up on what you guys were talking about, the market reaction to certainty, it's not just certainty. She is going to take an easy policy type of an approach, and she's probably going to reverse the Stephen Mnuchin clawback of some of that funding in short order and give the Fed more ammunition. We're going to be hearing 12:45 p.m. Fed Vice Chair Rich Clarida, ECB's Philip Lane, IMF's Kristalina Georgieva. They're speaking on a panel at the IMF about how to create a framework in a low-yield world, very much what the Fed and all central banks are concerned about. 1 p.m., the U.S. is selling $56 billion of 7-year notes. Interesting to see that yesterday the sale of 5-year notes did not do that well. Dealers had to take more. It actually came in with a higher yield. People pushing back with the expectation of more growth ahead, just ticking up, still very low. And at 1 p.m., President-elect Joe Biden and his Vice President Harris are going to be announcing key national security and foreign policy posts. This, Tom, is what you are watching. Either way, we're crystallizing what's ahead, especially after the GSA actually formally shepherded in the transition process yesterday. John?
Me or Tom?
John.
Tom, do you want to say something?
No, I don't want to say anything.
Sort of coughing a little bit.
John, I'm too focused on your new career as an influencer. I know. I mean, it's like the talk of everyone out there.
I was promoting my makeup in a commercial break.
You were the powder puff. It's good.
32.
I know.
Great product.
It's good.
Great product.
That's good. Instagram.
We can avoid that for now. I'm getting to the price action of this Tuesday morning. Let's get straight to it. Yesterday, really interesting session off the back of the positive vaccine news. Then a really decent, solid US PMI. Euro dollar out to 118.70, 119 briefly. Then we turned lower. The dollar pretty choppy, but I've got to say this morning, the trend is clear. It's a weaker dollar story. In a bond market, yields up by not even a basis point to 0.8586%. Commodities, there's a story here. We keep pushing higher. Copper, crude, up, and away. Up 0.8% on crude. Tom, to $43 and about 40 cents.
Very quickly, I know we want to get to our esteemed equity guest. Jeffrey Curry, Goldman Sachs, was lights out an hour ago, John. He was heated that this is where we break the bear market commodity trend.
Well, let's talk about energy equities too, up 30% or so over the last month. Phenomenal run in the energy space, not just in the commodity market, but in the stock market too. Joining us now, perfect guest, Jonathan Golub, Credit Suisse Chief US Equity Strategist, joins us on the year ahead. John, fantastic to catch up with you again, sir. 2021 and the return to normal, the title of your research, sir. What is normal these days?
Well, first of all, we're trying to really look out and push the horizon and say, you know, what does 22 look like? And the reason we're focused on that is if we're trying to forecast where markets are at the end of 21, it's going to be based on the way the world looks at the end of 21, peering into 2022. And at that point in time, you're looking at not an economy that's bouncing off the bottom with this discussion of cyclicals and low quality stocks. You're looking at an economy that's probably growing GDP in the low to mid threes, which will be very good, but actually slowing because we're moving towards a mid-cycle kind of environment already. Interest rates will probably be a little bit higher, but not dramatically higher. The surprise will be the unemployment rate is expected based on Bloomberg's surveys. The unemployment rate will be, you know, moving towards 5% towards full employment because we're going to find that the people who've been unemployed are going to be the easiest to put back to work.
John, let me go to what you do best. And folks, Golub's reports are exceptionally dense with ratios and margins and all that. Tiffany, just as one example, hammered by this pandemic, just came out with a 200 beep margin expansion. I don't know if they go up or down today. I don't care. John Golub, is that the surprise of next year, that corporations adapt and margins are solid or even elevate?
Yeah, Tom. I mean, if you actually look historically, and I know we're getting really in the weeds, the earnings improvement is always on the margin line. It's revenues will be up, you know, a bit. This is obviously a lousy year. Revenues will be back, I don't know, 5% or something like that. But if we're expecting something closer to 20% earnings growth, you're going to get there on the margin line, and I don't know if that's a surprise. It's pretty much what typically happens.
Jonathan, I know that one of your sectors that you like is financials, and we've seen a yield curve that's tried to steepen and failed again and again in some sort of sustained way. What's underpinning your financials call? And John Farrow has raised this point several times. How much does it hinge on the steepening of that yield curve?
Well, I think there's a half dozen things that are really working here. First of all, the banks have reserved for substantial losses. So they're in very good situation with their regulators. Secondly, the regulators have forced them to cut back on dividends and buybacks, and that's most likely going to get released in the second quarter, because my third point is that the loan losses are not getting worse and they've over reserved. So you're going to start to see probably around the second quarter, maybe the third quarter, that they're going to be giving more money back to shareholders, and that's going to appear to be a bit of a surprise from a valuation perspective relative to, you know, the way they normally trade. The two cheapest sectors are financials and healthcare. So you have all of those things working for you, even if you didn't get any yield curve steepness. Now, if you don't have at least a flat to steeper yield curve, the trade's not going to work. But even 15 basis points of steepening over the next 12 months, along with those other positives, is probably all you need for it to be a leading sector.
John, we've got to talk about the regulatory backdrop as well. So much discussions about Chair Yellen, monetary policy, fiscal policy. The last act of the Fed under Chair Yellen wasn't a monetary policy decision. It was a decision to stick the boot in to Wells Fargo. John, do you have a call for next year, your base case on regulation around this administration?
You know, it's a good question, and we need to hear more from regulators. I will tell you the question that we're getting about Janet Yellen in the Treasury role is, you know, what is she going to do to monetary policy, and is she going to do more QE? And the questions are kind of bizarre because they're really questions as if she was being appointed to another term as Fed chair, not as Treasury secretary. Her role is going to be different. I would assume that there's going to be some real respect for her thinking on those issues, given the role she's been in. But she doesn't control that, and she's going to. It'll be very interesting to see which levers she looks to push.
John, what is your call on the banks, on the financials?
Yeah, we're overweight financials. We have a very strange sector call, or at least historically strange. We think that next year is going to end up being another tech and growth year. So we're overweight what we call tech plus, but we're also overweight financials. And it's that we think the financials are in a much healthier position, or a much more advantageous position as compared to energy, materials, industrials, traditional cyclicals that do really well as the economy is reaccelerating. We think banks are going to do better because, as I mentioned before, yield curve likely steeper, loan losses coming in less, regulatory backdrop we think will be reasonable.
John, great to catch up with you, sir. Really enjoyed the research through the year, and especially over the last couple of weeks. Enjoy Thanksgiving if we don't catch up. Jonathan Golub there of Credit Suisse. Thank you, sir. This equity market up 27. We advanced 0.75% on the S&P 500. That's the call from the team over at Credit Suisse, Tom. Looking out next year, their call is to get into the future in the future. Get out to the back end of 21 and look out to 22 and think about what that world looks like.
It's a really, really different call. And of course, folks, this is the fun of what we do every day, is you really get some different calls here. But, John, what I'm seeing from Credit Suisse, as he said, is tech and banks. And I mean, it's way away from the conventional one-way call on cyclicals, materials, and the rest of it as well. The one-way call for me, John, is on radio and TV. We do have to really mention how you are developing this influencer kind of thing. I mean, you are influencing the influencers. And to see you, John, I'm really just honored to be with you as you're linked with Malum and Fidesz. I think it's it's amazing.
Well, I'm really hoping that going into year-end, Tom, I can establish some kind of deal with, say, Glossier, and maybe just do this part-time. Yeah, just a male makeup line, something like that.
I can see it.
Happy Thanksgiving.
Good for the climate, you know, that kind of thing. And then maybe you can join with me, and we can do it for the older demographic.
I went down
the younger and the older demographic.
I went down in influence flames. It didn't.
We can build out a joint Instagram account. Tom, that'd be really cool.
Oh my God, we gotta go.
All kinds of things.
Save the tots.
Alcoholic beverages. From London and New York this morning. Good morning to all.
Oh, that would be
worldwide.
Could do a simulcast Instagram.
As we work our way through this shortened trading week, stateside, this is Bloomberg.
Canoeing.
With the First Word News, I'm Rishika Gupta. President Trump is finally calling on his agencies to cooperate in the formal transition process with Joe Biden. That follows weeks of inaction. The General Services Administration made it official with its acknowledgement that Biden was the apparent winner of the election. Still, President Trump says he'll contest the outcome of the vote. Joe Biden has turned to former Fed Chair Janet Yellen to be his Treasury Secretary. If she's confirmed, Yellen would become the first woman in the job. She's pushed for additional fiscal spending to help the economy get through the pandemic. Yellen's likely to win support from both Wall Street and the Democratic Party progressives. British Prime Minister Boris Johnson has confirmed that England's national lockdown will end next week. It will be replaced by a tougher system of regional restrictions designed to last until spring. Rules may be relaxed in time for Christmas. Johnson says that if all goes well, the vast majority of people who need a coronavirus vaccine will get one by April. Goldman Sachs is planning a European stock trading platform in Paris. The aim is to make sure clients can still buy and sell shares, even if there is no post-Brexit agreement to allow dealing in London. Goldman has asked French authorities for permission to start in January. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Sony's PlayStation 5 went on sale Thursday, and the company hopes it'll become a long-term cash cow. It's a key test for the Japanese company amid the pandemic's gaming boom, and it goes head-to-head with Microsoft's new Xbox. Both consoles have seen solid pre-order sales. The previous console sold 113 million units.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Position closed on euro at 118.752. We have a profit 500 pounds.
Chair of the Fed and now Secretary of Treasury. So I think she's been very good at trying to build relationships across the aisle in Congress, and I think she has a very good focus on really trying to get things done.
It's a different skill set, and that's the challenge for former Chair Yellen as she is tipped to take over the Treasury. That was Randy Krosner there, the former Fed governor. Alongside Tom Keene and Lisa Abramovich this morning, I'm Jonathan Ferro. Good morning to you all from London and New York. Here's the price action this Tuesday morning. We had a little bit more weight to the rally over the last couple of weeks. On the S&P 500 up 26, we advanced 0.7% and through 3,600. The outperformance has come from the small caps. Yesterday up 1.85%. This morning the Russell up another 1.36. The small caps in America on fire at the moment. In the FX market, euro dollar 118.75. More broadly, a dollar weakness story outperforming the Aussie, the growth proxies. That's been a story in this market. In the bond market, yields higher by a single basis point to 0.8619%. Muted price action in the Treasury market, not so much in the commodity market. Copper pushing higher, crude as well. 43.50 insight on WTI, Tom, up 0.9%.
Yeah, I want to point out, John, as well, a massive data dump, a good amount of data today on economics, but John, a massive Wednesday data dump because of Thanksgiving that we'll see. That'll be something that the market will adjust to as well. Right now, well, it is a honeymoon. It is the odd honeymoon of a new administration. Kevin Cirilli is with us, honeymoon coordinator and chief Washington correspondent for Bloomberg. Kevin, I spoke to Jeff Curry at Goldman Sachs. We were talking ESG and the envoy, John Kerry. Great. They run into a small constraint, coal. Curry was adamant about coal as a legislative logjam on climate change. Explain the Republicans in the Senate, and particularly the gentleman from Kentucky, on climate change and the honeymoon going on right now. How fast are they going to end the honeymoon?
Well, look, I think it's not just Republicans. It's also look at West Virginia and Senator Joe Manchin,
key vote,
a centrist Democrat from West Virginia, who, yes, is in this upcoming Senate going to be a crucial vote in terms of getting a majority or stopping energy and other substantial policy issues from going through. The Republicans have struggled to communicate on the issue pertaining to climate change as it relates to attracting suburban and more moderate voters. I think back to the primary of yester cycle when Carly Fiorina urged there to be a public and private partnership and for the private sector to be able to innovate, so to speak, on the issue of climate change. But to answer your question directly, there were two things that I think come to the forefront of yesterday's announcement of John Kerry, former Secretary of State and standard bearer of the Democratic Party, being named as the climate czar. First and foremost, Paris Climate Accord. This is without question another illustration of how the incoming administration is going to be looking to regain and reattract allies to multinational, multilateral type of agreements, not just on the issue of the economy, but in this case, on the issue of climate. And then secondly, I was struck by GM announcing yesterday that they are no longer going to be backing the Trump administration's lawsuit with regards to California. A clear sign, again, of the private sector moving in a different direction than some of the political types here in D.C.
Kevin, congratulations on answering that in a very cogent and serious way after being called the honeymoon coordinator. We should have a camera just showing your face over and over again as you try to field whatever Tom throws at you. I do wonder, though, there is a broader point here when you talk about coal and you talk about global warming, about regulation. And it's not just the energy sector. We're also seeing the potential for it in the financial sector with the idea of Janet Yellen stepping to the helm of the Treasury Department. Do you feel like the regulatory landscape is going to tighten dramatically based on some of the individuals that have been appointed or nominated so far, and perhaps even more than people previously had thought?
It's a change in direction, no doubt, with a new party taking over the executive branch. However, divided government and a clearly divided Senate is going to serve as a check and a balance in terms of how far the progressive wing of the Democratic Party can push over President-elect Biden from this regards. Look, President-elect Biden, as has been told to me throughout the past several months, is a centrist at heart. If you look in terms of his previous record from his time in representing Delaware in the Senate, flash forward all the way to why he was chosen as vice president in the Obama administration, is because of that ability to navigate through centrism. And then with regards to Chair Yellen, this is a pick without question that in 2013, she was able, when she was confirmed for the Fed chair, I remember covering those confirmation hearings in Dirksen, she was able to attract some of the progressives and was not seen as a controversial pick as some of the others during that time period would have been, and someone like a Senator Elizabeth Warren would have voted against. But she is going to be someone who is going to be urging for more fiscal relief, as she did at the Bloomberg New Economy Forum, and she's been out front of this, even speaking more publicly than the current Fed chairman about the need for more fiscal relief. There are a lot of Democrats who like that. I don't, based upon my reporting, see any hurdles to her confirmation.
Not much controversy here whatsoever right now. We're not talking about Rice and Warren. We're talking about Blinken and Yellen. Yeah. Kevin, something I think we need to talk about a little bit more. If the Senate does stay Republican, this could be a trade story for this administration. That might be where they put their mark on things, in the same way the administration we're with right now currently has done. What do we know about Chair Yellen and her views on trade and that relationship with China and how that develops?
That's the biggest unknown, and that, if you look at her confirmation hearings, is really where I can tell you that she will be asked. Because in addition, we know how Chair Yellen governed at the Federal Reserve. We know that she has been out front in recent weeks and months with regards to domestic affairs and on issues pertaining to income inequality, a thread that emerged during her tenure at the Federal Reserve, which she brought to the forefront. What we don't know is some of the other responsibilities at the Treasury Department. Tariffs, for example, international security, for example. And I would anticipate that there are going to be several questions that we'll get some more clarity on. And then to your point, just quickly, with regards to the tariffs as a whole, there is agreement in the Bernie Sanders wing and in the Tea Party wing on issues pertaining to tariffs. For someone like Tony Blinken, he's really framed the next foreign policy and geopolitical divide as techno-democracies versus techno-autocracies. The way that Western democracies utilize big tech and freedom of speech on the internet is very different than how the Communist Party of China does. And that's going to be a sphere, I think, that we'll all be watching over the next couple of years.
Kevin, great to catch up. As always, Kevin's really there down in D.C. Tom, for many people, this is a bit of a blind spot. This administration, the president ultimately will set the agenda for the Treasury Secretary, I'm sure. But this is what she had to say a couple of years ago. I do not see unfair trade practices in China or anywhere in the world as that being responsible for the U.S. trade deficit. I wonder what that sounds like in the years to come.
Well, the months to come. I mean, I think it'll be something addressed very quickly, but I still go to, John, we're in honeymoon phase right now. As Kevin mentioned, it's going to be sport in the Senate.
This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
On this Tuesday morning, good morning. This is Bloomberg Surveillance, and here's the price action. The bid is still in this equity market, a lift on the S&P 500 by about 0.6%. The split, the divergence between the small cap outperformance that continued yesterday spills into Tuesday as well. We're up a little more than 1% on the Russell, up about 0.2% on the Nasdaq, on 3,600 watch on the S&P 500. It's not about where this market has been rallying, it's about specifically where it has been rallying, not at the index level, but beneath the surface in the sector side of the story. And a story for me, energy, financials. Energy up about 30% over the last month. Banks up by about 20. In the energy space, commodities have come along for the ride. Will the Treasury market come along for the ride for financials? Switch up the board in the bond market. Just not much price action in the financials' favour over the last couple of weeks. There was a little bit of a lift in Treasury yields this morning. We give that up. The 10-year yield now basically unchanged, up almost a basis point on a 10-year to 0.86%. On a 30-year, up about a basis point to 156. That's the story of the bond market. I want to finish with foreign exchange. Dollar weakness pervasive through the morning. Then it starts to fade just a little bit. Aussie dollar was up by about 1% on the Aussie, stronger against the US dollar. We give some of that up. The Aussie right now up by about 0.7%. But the calls for more pronounced dollar weakness against the euro continue to come through. Euro dollar 118.65, up 0.2% on the session. Kick Dukes of SocGen out earlier this morning, Tom. Year-end 2021, 127 on euro dollar. That's the call coming out of SocGen.
We're seeing these huge calls both ways on strong yen, strong euro. It'll be fascinating to see. That's a ginormous move mentioned by Mr. Jukes. We're going to rip up the script, which we do here, and we can always do that with Michael McKee, our economics and policy correspondent. Michael McKee, NBC, saying Michelle Flourney will be picked for Secretary of Defense. This is according to People. We'll have to see how that plays out. Boy, Michael, that really indicates a Biden moving to the center, as we saw with Chair Yellen.
Yeah, she's an establishment candidate, but she is a woman, so that would be a notable departure for the Defense Department. She'd be the first woman Secretary of Defense, but you're right. She served in the Obama administration as the third highest ranking civilian at the Pentagon, as the policy chief, and she was widely expected to be the Secretary of Defense perhaps under Hillary Clinton if she had won the presidency back in 2016. So she is definitely an establishment candidate, and of course, after the Obama administration, she founded a national security advisory firm, West X Advisors, with Tony Blinken, who's the now nominee for Secretary of State. So she's well known in Biden circles.
So given, Mike, this move to the center that we're seeing as consistent throughout all of the picks that we've heard so far, what does that mean in terms of Biden's economic policy?
Well, his policy is going to have to be driven a little bit by the virus at the beginning, in the same way that Barack Obama had to come in and deal with a crisis. We've got economic projections from people like J.P. Morgan suggesting that we're going to see a contraction in the first quarter. The Biden administration hopes they could get some sort of stimulus package before the inauguration, but that's going to be up to Mitch McConnell, not them. And so they may have to start off with just sort of triage and keeping the economy going. Then it'll be interesting to see what they do in terms of setting the economy up for growth in the future, whether they believe in additional taxes, what kind of training are they going to propose, and then how does climate change play into this? And I think that's an underplayed aspect of Yellen's nomination. She's been strong on the idea of a carbon tax, and of course with John Kerry going to be named sort of a climate czar in the Biden administration, there could be an emphasis on that a little bit later into the term.
Mike, forgive me for getting out just a couple more years and getting out to 2022. The reporting yesterday started with Lael Brainerd being asked to stay on the Fed. Then things started to move and we started to realize this is a done deal now. Janet Yellen is set to get the nod. In 2022, terms up for Jay Powell. Mike, how are you thinking about a 2022 Fed looking out with potentially a Chair Brainerd?
Well, I think it's a little early to say in this sense that we don't know, first of all, what Jay Powell wants to do. Does he want another term? And then, two, what kind of job is he going to be doing between now and then? And the market's going to demand that he be reappointed. I don't think Joe Biden is going to be like Donald Trump and just get rid of somebody for the sake of getting rid of somebody. But if Powell is lukewarm about staying on, then you've got Lael Brainerd in waiting. She is a Democrat. One of the issues is less the idea of her becoming chair, as if she were to leave to become the Treasury Secretary, then you've got to replace her on the board. She's the only Democrat there now. Would Mitch McConnell even let you fill that seat? They've been down 2 people for years, and would they be down 3? Would the Republicans block any kind of Democrat from coming onto the board? So I'm sure that's part of the calculation.
Michael McKee, thank you so much. Greatly appreciate this morning. We drive forward the discussion with the gentle lady, Dr. Coronado from Texas, of course, with BNP Paribas for years now with macro policy perspective. Julia, you spent 8 years at the Fed. There's nothing like the Fed institution to give somebody clarity in project-driven process. What is the Yellen process? When she takes on a project, how does it go?
Oh, boy. When Yellen takes on a project, she learns everything she can about it. She's the most diligent, hardest worker in the room. She's also pretty open-minded, but she knows her mind. So once she's decided how to tackle a problem, she's very deft at bringing people on board and building a consensus. She was a master of that at the Fed. Obviously, as Treasury Secretary, she has less of a consensus-building job, but more of a job on Capitol Hill.
Exactly. That's where I wanted to go. Your perspective on how she will handle the Senate.
I think she's got really good established relationships on the Senate. She had support and respect on both sides. Obviously, we're in a more divisive atmosphere, and a lot depends on the outcome of the Georgia elections. But I think, you've got a solid set of centrist. It's a close enough divide in terms of Republican control, and you've got enough centrist, moderate Republicans to work with that I think Yellen can manage to get some of the agenda through. As Michael was saying, it's going to have to be more towards the centrist policy arena, but there's plenty to do there, and I think Yellen's going to be good at managing those relationships and moving those things forward.
Julia, in some ways, we've had a regime change at the Federal Reserve. We've had a reaction function shift largely off the back of, let's just say, the experience of the previous cycle, the experience that Chair Yellen worked through, and I imagine, has been conditioned by. How do you think those lessons learned in the monetary policy arena will apply to the lessons learned going forward from here in a fiscal policy arena?
That's a great question. I mean, I think there's been some attention given to remarks she's made about the unsustainability of the deficits and the debt. I don't think that's going to be her focus. I think those have been overemphasized. I think Yellen learned, as did the FOMC, that you do have more scope in a low-rate world and low inflation world to really push the recovery first and foremost. So I think that's going to be her focus, to get the economy back on track, to guide Biden's agenda in that direction, to not be worried about the debts and deficits now, to tackle those problems once we have a really, truly sustained and established recovery under their belt.
Julia, nobody argues with the credentials that Janet Yellen has that she brings to the table for Treasury Secretary, the position. There is a question, though, about the visuals of this. The Fed is supposed to be an independent body. Janet Yellen, very much a Democrat, coming and being part of a Democratic administration. Do you think that this threatens, at least from a visual perspective, the independence of the Federal Reserve?
I don't think so. I mean, I think Janet Yellen herself definitely respects the different roles. So while she has fantastic relationships at the Fed, she's going to respect those boundaries because she's like that. And I think, again, that the credentials here, look at how the markets reacted. I mean, I think she's got so much respect around the world, both in markets, amongst policymaking circles. I think the benefits of that, of having a good, steady, competent hand at Treasury, respected around the globe, is far outweighs any concerns you might have that she's going to work too closely with the Fed. This is a moment right now, by the way, which is what we saw earlier in the year, where the Fed and the Treasury do need to work together. They work together on the 13.3 facilities. She could help revive those if that's deemed necessary. And so I think that actually that could be a benefit And there's just so many other benefits that come with a Yellen nomination.
I mean, Julia, so many ways to go here, but I really have to circle back to the Senate and the reality of trying to get budgets through. How constrained is the Secretary of Treasury, we presume, constrained by the debt and the deficit?
Well, you know, I think we're seeing the Republicans bring that out again.
Yep.
I think really that's not an issue in terms of the economics of it. That isn't and shouldn't be an issue for a very long time. And I think it really depends. I think we have to see what happens in Georgia. That's going to be very important. But even if the Republicans get both seats, there are people to work with on the moderate side. They don't need that many, right? They only need a couple of votes. So if they've got some well-crafted policy with, you know, benefits for the economy, I think that they'll be able to find enough partnership to get some things through. So, I mean, we know Mitch McConnell is the expert at blocking everything. But I think, you know, again, we've narrowed the margin a little bit. So I'm not as convinced that they're going to be absolutely hamstrung on getting anything done, or that they're going to be able to just throw the debt and deficit as a roadblock for everything. I think maybe I'm being Pollyanna-ish here, but I'm not known for that, Tom. So I think Yellen's going to be able to, especially now when there's a lot of urgency. You know, we need some stuff done. The vaccine news is fantastic. That gives scope for actually getting to a better future, but we've got to get there. And even distributing and managing the, you know, administration of the vaccine is a huge challenge that requires federal money and organization.
Julia, we've got to leave it there. Fantastic to get you on the program this morning. Julia Coronado there of Macro Policy Perspectives. Tom, this is the important difference between this role and the next role for former Fed Chair Janet Yellen. It's the skill set. It's the distinction, the difference between politics and economics. At the Fed, you've got to make a compelling economic argument. In a new position, you've got to make a compelling political one as well to convince the people around you. That's going to be the challenge.
I wonder, John, if good equity markets also help Democratic administrations, as Mr. Trump emphasized as well.
Yeah, I wonder. Coming up on this program, Kathy Hochul, New York's Lieutenant Governor, at a tough time for the state of New York and the country that is the United States of America as we work our way through Thanksgiving and beyond with the pandemic still raging. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Things will get worse for the airline industry before they get better. That's according to the International Air Transport Association. The trade group estimates that airlines will lose almost $39 billion next year. That's more than double the forecast in June. And that's on top of a $118 billion deficit in the current 12 months. Airlines are hoping that the rollout of vaccines will lead to the lifting of travel restrictions. The formal transition of power between Donald Trump and Joe Biden has finally begun. The General Services Administration has acknowledged that Biden was the apparent winner of the presidential election, and President Trump has called on his agencies to cooperate. Still, the president says he'll continue to challenge the outcome of the election. And Joe Biden may have found a Treasury Secretary nominee who can appeal to both bankers and liberals. Wall Street is likely to support former Fed Chair Janet Yellen because they feared a more provocative pick like Senator Elizabeth Warren. And progressives were concerned that Biden would pick someone too friendly to the big banks. If confirmed, Yellen would be the first female Treasury Secretary. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
The fact that we do have vaccines available within the near future is a very positive thing for the industry. Then we need to look what are the local rules and regulation and legislation country by country by country. And I think the vaccine will definitely help to restore confidence in travel. I think it's a bit premature now to say whether it should be mandatory on board of our flights or not.
Should it be mandatory? Who will police it? That was Peter Albers there, the KLM CEO from New York and London this morning. Good morning. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Tom Keene, the Qantas boss, coming out and saying that over the next year, if you want to get on our international flights,
I saw that.
You better have taken this vaccine. Maybe that's where the policing comes from, not from governments, from corporations.
No, I thought that was really interesting, John. I'm glad you mentioned that. I should point out also KLM, along with Air France, looking for a Dutch bailout earlier in this week. Right now, on New York State is a proxy for American. Why do I say that? Well, it's not about, say, Tiffany and earnings today at 5th Avenue and 57th Street. It's maybe south of Buffalo, New York, to Yorkville and over to Warsaw. In the fields of Western New York, the pandemic is out of control. Kathy Hochul knows his territory cold with Governor Cuomo. She is a lieutenant governor and has been a wonderful voice for us over the recent weeks. Kathy, the Buffalo News has my article of the day on the pandemic, and it's real simple. It's not about the beds, it's about the staff in hospitals. How critical is hospital staffing in the Empire State?
Well, Tom, thank you for having me back on the show again. That is absolutely the situation we find ourselves in. I was just on a control room call with all the leaders of our hospitals as well as with the leadership of our elected officials throughout Western New York. We can put together as many beds as necessary. We can fill a convention center. We have plenty of PPE. The governor insisted that every hospital have a 3-month supply of PPE before they could reopen. Here's the situation. We don't have people coming from all over the country to help save New York City and New York State like we did in the spring. We had 30,000 healthcare workers answered Governor Cuomo's call for help at our darkest hour. We don't have that anymore. In fact, the people we have now, they're exhausted. They're burned out. They're getting sick themselves. And they're pleading nonstop, saying, do this, please, people, follow for our own health. And so it is going to be a crisis situation if the numbers continue on the path they're on. No doubt about it.
And Lieutenant Governor, to bring this back to 5th Avenue, David Reich of Mount Sinai saying much the same thing the other day. Okay, you've got a Biden administration. There's change in the wind as well. But you still need, as a Democrat, to deal with a Republican Senate, ex the Georgia vote that I know is coming up. Do you see any greater of a chance now of you getting the aid you, the MTA, the governor need sooner?
Well, the situation is that there are Republican senators who represent states that are going through hell right now. I mean, representatives from North Dakota, South Dakota, Iowa, Idaho, they were not willing partners with us in the spring when it was mostly the northeastern states and California that were being hardest hit. Remember, Mitch McConnell said no bailout for the blue states? Well, my friend, they are now red, white, and blue states. So it's all over America. And I hope that that will shock the consciousness of the senators as they listen to their Republican governors who are desperate in need of money as well to help compensate them for loss in revenue, for the extraordinary costs they're incurring, having to pay so much for extra overtime and helping, all the healthcare workers that need to be paid. And so I think that could create a different dynamic than we've seen before. I hope it does. It should. And Governor Cuomo, I know, has a very strong relationship with President-elect Biden, as I do from my time in Congress. So we know that we'll get a good ear out of the White House. certainly the House of Representatives, and the Senate will look really bad, and they have elections coming, yes, in 2 years again already, and they need to be cognizant of that. This is their time to stand up for their country and their states, and they need to do it by making sure that there's money for not just state and local governments, but we need PPP again. We have businesses that are being re-shut down after reopening all across our state, all across the country, and these poor businesses cannot survive without federal assistance.
Kathy, in the meantime, before we get any fiscal support, we are going to probably be getting a vaccine, possibly in the next couple of weeks with emergency authorization. What's the plan? Who gets it first in New York? How quickly will it get rolled out?
I think your last question is the most important. I hope we, to reverse your question, I do hope we get a stimulus plan before the vaccine is widely available. We don't expect there to be mass inoculation of New Yorkers until 6 months from now. We will start with the healthcare workers, the frontline workers, those who are vulnerable, the senior citizens, communities of color that are having infection rates at much higher than the national average for whites. The communities of color, black and brown, are really being harder hit. So we have a plan that Governor Cuomo and our team have been working on literally since July. We have a Nobel Prize winner heading up our efforts to ensure the safety of the vaccine, along with what's going on at the federal government. But we will get it out to New Yorkers as soon as humanly possible, the second it's available. In fact, the governor has said we'll have the most robust distribution plan in America. That all being said, this is not the save-all. This does not allow you to go around without a mask and say, well, I'll get a vaccine, I'll be fine. That vaccine is not going to be widely available for months. And so we're going to have to adapt to it. And we'll need that money before that's available.
So, Lieutenant Governor, you've got a plan that you've come up with for the state of New York. Can you walk me through whether there is a plan at a federal level and what the discussions between the state of New York and the federal government actually look like right now?
Well, yesterday, the governor has asked me to participate in a call with the White House with other governors, and there was a very aggressive plan. We talked about our role in that in terms of the distribution, and they're working on this closely. So we are in partnership with them. We have to be. We're not going to, just because it's still the Trump administration, not work with them. Of course we're going to work with them. It's great to know that they're working aggressively. But we also know that as soon as Joe Biden takes over, January 20th, I anticipate that there'll be an understanding that the Trump plan as it stands now is focused on, yes, they've identified populations that should get it first, but also their plan does not take into consideration the fact that most people do not have a pharmacy or a doctor readily available to them. Look at our most densely populated urban areas. There's not a CVS, a Rite Aid, or a Walgreens on every corner. You see that in wealthier suburbs. We don't have that in rural areas. So to expect that people are going to be able to go to a doctor easily and also be able to go to a pharmacy to get it is really unrealistic. So in New York, we're going to make sure that we engage the churches, the community centers, the senior housing, the congregate setting sites. So we're going to be drill even deeper down into the distribution that is being offered by the federal government. But as I mentioned, our communication was as recently as 24 hours ago. So it's ongoing.
Kathy, we appreciate the update. Thank you. Kathy Hochul there, New York's Lieutenant Governor. Tom Keene, this is going to be a huge effort, not just over the next couple of months, over the next 6 to 12 and maybe beyond.
Yeah, there's no question about it. The story moves on forward, and you just have to see when the aid comes from the government. John, I do want to point out, as we look at all the transition in that, the president quite active on Twitter this morning, 6-7 tweets and retweets, all about election fraud. I mean, it is most bizarre.
The market has moved on and has been moving on for the last several weeks. Coming up, Patrick Armstrong, Plurimi Wealth Chief Investment Officer from London and New York. This is Bloomberg.
In our interconnected world, if people in low and middle income countries miss out on vaccines, the virus will continue to spread and the economic recovery globally will be delayed. Equitable access is in the national interest of each and every country.
But this also means if we have a vaccine, we should have a common approach to give a fair share to everyone so that the most vulnerable groups, the frontline workers and the healthcare workers, for example, are the ones who get the vaccine first.
We're donating another $70 million to fight COVID-19. $50 million of that will be for buying vaccine doses for low-income countries, and another $20 million will be for researching even further in new vaccines altogether.
Il nous faut nous assurer que les conditions réglementaires et politiques sont toutes réunies pour un accès le plus large et rapide possible à ces produits, tout en respectant les standards internationaux de qualité. C'est pourquoi la France propose que puisse être rapidement adoptée une charte d'ACTA qui réaffirme ces grands principes: partager la connaissance, soutenir les systèmes de santé, avoir des produits rapidement accessibles et abordables.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Scenario for markets would be if the unemployment rate in November will begin to go higher.
Even before the pandemic, we had a lot of frailties.
Equity volatility and equity uncertainty still remains elevated.
I think we will have weathered the storm, and I do hope that the worst will be over by next summer.
We may experience a bit of a dip economically.
It isn't as much a risk of a double dip. It's a risk that we extend the rebound.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Lisa Abramowitz, Tom Keene, and the influencer Jonathan Farrow with you this morning. A simulcast on Bloomberg Radio, Bloomberg Television. We got all this politics going on. Chair Yellen, Courtney Cube over at NBC saying floor need to take defense and all that. I want to do the markets to start our simulcast in this hour, John. And John, I'm going to go right. We'll do the data check sort of as we talk here. John, Dow up 1%, SPX up 0.7%, and once again, the NASDAQ lags. Is the trend in place?
The trend is in place over the last couple of weeks, and the small caps outperformed. They outperformed yesterday. They outperform again today. And many people, in the words of Jonathan Golub, willing to de-emphasize the near-term risks and look at the forward outlook. The forward outlook increasingly brighter over this last month.
And, of course, we're getting into all the year-ahead looks and all that parlor game. I love what Farrow did like 2 years ago. He said, forget about it, wait for March. But, John, what's so important is a guy like Golub is saying tech and financials, but where the consensus, would you say, John, the consensus right now is cyclicals, materials, and small caps and all the rest? Yeah.
Overwhelmingly, it's the consensus. That's the story, the cyclical boat. The other consensus story as well is the weaker dollar. SocGen out to 127 on euro dollar year-end 2021. And I think everyone's been waiting for that trade to develop, Tom. We still haven't got through those levels from late August. We didn't close below them yesterday. A little bit of weakness again this morning, started to fade again. That's the call for me that sticks out. Do we finally get that 2017 type story of synchronized global growth and a much weaker US dollar off the back of it?
I get it. 127 euro, stronger yen, folks. 95 yen is unimaginable. I still say, and we heard this from Professor Rogoff of Harvard a couple weeks ago, the idea that if you get that, those countries will react because they won't like it. We'll have to see how that plays out in the coming weeks. What we're not talking about is the bond market. Lisa Bramwitz dozed off in the last hour. Bonds are so slow. Let's start with a why, Lisa. Why are bonds not part of the discussion?
Well, because growth is not necessarily going to take off. And this is my real conundrum. I'm looking right now at the Russell 2000, one of the consensus trades, up 25.5% in the past 2 months, right? This idea that the growth area is going to go gangbusters, and yet long term, how does growth accelerate given the overhang of debt, given that $20 trillion of extra debt that's been incurred this year? And I'm looking at this, and that's suppressing yields, not just the idea that the Treasury, the Federal Reserve is going to buy more treasuries. And I'm wondering, is this incoherent? Is the bond market sending a message that is incoherent with the growth story that we're seeing in stocks, Tom?
And now a question I ask folks like literally once a year because I really don't care. Lisa, how about those auctions yesterday? Wasn't it mixed?
Way to sell it. Really way to sell it. Thank you. I really appreciate that. Yeah. You nailed it. I will say this. They didn't do so hot. People actually cooled a little bit on that 5-year Treasury auction, and we're going to get another one 7-year later today. Dealers taking down more, the yield coming in a little higher, Tom.
John, what's the mood? One final question before we get to our good guest. What's the mood in London, John, that you see on equities?
On the equity market, the mood is really picking up. I've got to say, people are becoming more constructive. Yeah. If you want to go to cyclicals, Tom, the UK, look at the weighting of the FTSE, heavily weighted towards the energy story, towards the mining story. We've seen a big rally there in the United States, and people becoming increasingly more constructive on the UK as well.
Well, that sets up the landscape, folks. And, of course, on this Tuesday into a huge economic day in America, it's tomorrow because of Thanksgiving. John, Thanksgiving is pilgrims over here, turkey, celebrate.
He's trolling us all morning.
I only lived there for 4 or 5 years, Tom. I only went to about 4 or 5 Thanksgivings with you.
Yeah, and Al from New Jersey made you work 4 or 5 Thanksgivings as well. Let's get to Patrick Armstrong, Plurimi Wealth Management here on the equity markets. Patrick, how have you changed your portfolios as we move to Dow 29,000?
We have been quite active this month, actually, probably repositioning. Last time I was on with you, I was talking about our preference for large cap quality and growth companies. And following Pfizer's first announcement on the vaccine and then Moderna and AstraZeneca, the market's really pricing in now the recovery that's going to be lasting in 2021. I suppose Thanksgiving week all the time is when everyone gets their next year outlooks out. And it's difficult to see how we don't have a strong second half of 2021. And with the growth that you get there, the cyclical rally is what's starting to be priced in. And we've been repositioning our portfolio, basically getting into some of these more value and cyclical companies. So we still have a lot of our large cap growth companies, but we've really removed the bias we were underweight cyclicals coming into this month, and we've neutralized that over the last couple of weeks.
Patrick, where does gold fit into all of this?
Gold, basically November's been a month of everything that's been great is being funded. You sell those things to buy things that have been terrible. And gold we still own. We came into the month with a 6% weight. We've actually cut that in half to 3% in our multi-asset portfolios now. And the outlook for gold was based on a blue sweep where there would be massive amount of debts, huge deficits, and the need to monetize that debt in the future. And now with it's looking like a Republican-controlled Senate, that spending is not going to be as rampant as it would have been otherwise. And also the cyclical risks are starting to dissipate with the vaccine. So we still like gold. There's still a mountain of debt overhang that will be needing monetization, but probably not as extreme as we thought it might be a few weeks ago.
Patrick, has the strength in the bond market been incoherent with this bullish call on growth?
It's for growth, yeah. It's the cyclical currencies and bonds. If growth comes in as what the consensus view is at this point for next year, you have to see higher bond yields. You'll have to see strength in emerging market currencies and the European currencies versus the dollar. The weak dollar will be the backdrop there. But the thing with currencies and bonds is they're not just left to market forces. It's central banks are still the driver of these things, and there's no let-up from the Fed in purchasing bonds. And I don't know at what level they'll start to worry, but yield curve control will start to come in if the economy is not reaching its potential and bond yields get past 1.2%, I think. So it's not just market forces driving bond yields.
1.2% is the new pain threshold for this Federal Reserve and 10-year yields. Patrick, you've got a high-class problem. You bought credit in March with some really juicy yields. And I just wonder, Patrick, what do you do with that debt now? Do you just sit and hold it? Do you sell it? You were talking about funding, using the winners as a funding source to go and buy something elsewhere. What do you do with the credit you bought back in March?
Yeah, we haven't sold it yet, and we were buying bonds that were yielding 4.5%, 5.5% for investment-grade debt, and they're yielding 1.8% today. So it's not going to cover expected inflation over the medium term with corporate debt that you do have credit risk with. So valuation's definitely not compelling, and I think this is symptomatic of that thought process that I have to go through on this, and everyone has to go through on this, is you're not preserving your capital purchasing power if you're in corporate bonds, even at investment grade BBB levels anymore. So it pushes you up the risk spectrum, and I think that's really why we see the euphoria right now of chasing cyclical assets. Those are the only things that aren't trading at extreme all-time highs almost. So it's not necessarily a healthy dynamic, but it is a dynamic that central banks and monetary policy force investors to make those decisions.
I mean, Patrick, I got to admit it, John Farrell influences there with that important question. It's actually, folks, a really, really important question right now. What's your experience here? Does successful bond money price up, yield down? Is there a history where it rotates to stocks?
It's hard to basically assess exactly where it goes, but that's what's happening right now. Is you got yield in March by buying corporate bonds. You can get yield right now in some cyclical equities. The banks all of a sudden are going to start paying dividends again next year. So you aren't getting a yield. You're not getting a real return on corporate debt. If that's your objective, which many investors really put their capital at risk to grow purchasing power, you do have to take more risk to do that now.
Patrick, great to catch up. Patrick Armstrong there at Florimi Wealth. Thank you. Tom, that's the story, isn't it? And if we keep this sort of surface level, if you managed to get in there when credit was bottoming and you got high yield with an 11% yield, you've got some really quite nice income over the next 5 years. What do you do with that? You could cash in a massive capital return right now, or you could just sit on it. And that's the decision that people like Patrick have got to make. And I say it's a high-class decision because for the people who got it really right, they were the people that bought credit at the lows in March. Is what you do now, I think, is an interesting call.
Yeah, these are micro problems. And I guess, John, I thought your question, I bust your chops about it, was actually a really, really serious question. My experience on this, John, is getting out of a successful trade is really, really easy. It's what do you do when you're in cash? It's a four-step process. It's not out of bonds into oil like what Lisa did with 2 oil drums in her living room. What was that, a year ago? She was brilliant on that. It's out of bonds into cash, sit in cash, and the then what? And it's the then what, John, that's just brutal.
And Lisa, we've talked so many times about the cash and money market funds right now. North of 5 trillion at one point, I think, earlier this year. And many people saying that we can chip away at that. That money needs to be deployed. Where are we now?
Yeah, well, and we still have that overhang. My question is, though, how much is going to go into stocks, how much is going to go into bonds, and how much is going to go into alternatives seeking some sort of yield? I don't know. I mean, honestly, people want their cash, especially without the certainty of a vaccine, John.
Well, I was going to say, how much of it just stays there, Tom? How much of it just stays allocated to cash?
Well, cash or near cash. Cash or near cash. Yeah, that's a fair question. But, well, a lot of it sits there. There's it's part of let's say you got a barbell on institutional money and you got your risk out 10 years, 20. Lisa's got 50-year paper. Fine, you need the cash on the other side to barbell it.
So, John, what are you going to buy with it as an influencer? What should people be using their cash on? Yeah, exactly.
I don't think I should be recommending trades for anyone out there. on new makeup lines. I'm not sure anyone's going to want to go in that direction.
Skinny ties.
Maybe they will.
You know,
I mean, Tom and I used to talk about the line outside Glossier downtown New York,
we did.
Tom.
I see you on the fashion list.
I'm not even sure that store's there anymore, which tells you that you should never listen to us.
Yeah, you're on the edge of Nicolette Mason. I can see it.
When we talk about it, it's probably the top in more ways than one. Coming up, Dr. Mercedes Carnathan, Northwestern University Department of Preventative Medicine Vice Chair. That conversation just around the corner. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. President-elect Biden reportedly will name Michelle Flournoy to be Secretary of Defense. NBC News says the announcement could come today. Flournoy was Undersecretary of Defense during the Obama administration. She would be the first woman to run the Pentagon. Meanwhile, former Fed Chair Janet Yellen would be the first woman to be the Treasury Secretary if she's confirmed. Yellen has pushed for additional fiscal spending to help the economy get through the pandemic. She's likely to win support from both Wall Street and Democratic Party progressives. And President Trump is finally calling on his agencies to cooperate in the formal transition process with Joe Biden. That follows weeks of inaction. The General Services Administration made it official with its acknowledgement that Biden was the apparent winner of the election. Still, President Trump says he'll contest the outcome of the vote. And British Prime Minister Boris Johnson has confirmed that England's national lockdown will end next week. It will be replaced by a tougher system of regional restrictions designed to last until spring. Rules may be relaxed in time for Christmas. Johnson says that if all goes well, the vast majority of people who need a coronavirus vaccine will get one by April. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
obviously, sort of the technology landscape has gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Irrespective of the dosing, if you get vaccinated, it's clear that the vaccine is safe and has an effectiveness of 100%, irrespective of the dosing. So that's incredibly important to remember. And of course, we will have that discussion with the FDA as well.
That was Ruud Dobber there, the AstraZeneca Biopharmaceuticals Business Unit President, speaking to Bloomberg in the last 24 hours from London and New York this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's the Tuesday morning price action. We add to the gains of Monday. Every single Monday so far seems to be a vaccine-related story.
Tuesday,
and the
John.
good news is the story's positive. I'm saying that was Monday. This is Tuesday.
Okay.
This is the Tuesday
Look at the
morning
market
price action.
today.
We had some weight to Monday's
Wow.
gains. Thank you. Up 30.
The news
we
you need
advanced
to know.
0.8%. Can't believe this marriage has lasted as long as it has done.
It's been
33600 on the S&P 500. We should run a book. Euro dollar 118.67, up 0.2%. Who do they move off the show first, Tom or me? There's one for you. Commodity market, crude higher.
I mean, he's going to leave me for some influencer out on Instagram.
Tom, the greatest hits this week. You've got Kick the Ball Hard, and it's Tuesday. It's not Monday. It's Tuesday.
We
Carry
welcome
on.
you to our simulcast here on Bloomberg Radio and Bloomberg Television. Really interesting day. I thought it'd be a little sleepier, and I'm wrong. Futures up 30. The VIX now under 22. That's a big deal, 21.97 on the VIX. We've been looking at the pandemic, and we look at it now under the gauze of Thanksgiving and travel. Yesterday, I believe, the biggest day for TSA since March. Mercedes Carnathon joins us at Northwestern and has wonderful academics and actual data of what we do. Let's call it medical epidemiology. We're thrilled she could join us this morning. Mercedes, would you fly this week?
I have to say, I was very tempted to wish that I could be somewhere a little warmer than Chicago right now, but I think that it's really not safe. And what concerns me are the crowds and the number of people at the airport and what I would be bringing from Illinois, which currently is a high-burden state for coronavirus, to my loved ones in other cities. And I'm not willing to take that chance personally.
Mercedes, could we have had Thanksgiving with our families if there had been better testing, if it had been more available and faster to return?
I think testing is a huge part of it because it does tell us who is infected. But if only those individuals with symptoms or direct exposure present themselves for testing, we still don't know what's going on with asymptomatic transmission. And that's really the wild card here. So testing wasn't going to do the trick on its own. That needed to be combined with everyone adhering with the recommendations to stay 6 feet apart, socially distance, wash hands, so that we could just drive down transmission to a level where we can get around and see one another.
Mercedes, the hope has come all the way off the back of the vaccine news of the last month. And I just wonder, Professor, from your standpoint, how quickly things can normalize and the vaccinations can ramp up to the extent we need it to pull back on these restrictions. Do you have a time frame in mind at all?
Well, right now, I feel very hopeful. And a clinical colleague said to me, hope is on the horizon. We see that medical professionals and other essential personnel will start getting vaccinated in December and the first quarter of next year, starting then following with other vulnerable populations. So there is what we hope to be an end in sight. However, without the general public adhering to the behaviors to reduce transmission, this virus is going to scorch the town on its way out the door.
Hours from distribution to arm. Explain that to us. How hard is it? It's like the cable TV last mile thing. How hard is it to get the vaccination to my sore left arm?
There are a number of steps that have to happen in order for it to reach individuals, starting with the capacity for the vaccines to be stored safely. As you know, 2 of those vaccines require ultra-cold freezers that are typically only in major urban centers, academic medical centers. So that's one piece of it. The vaccine has to get to a given region. Once it gets to that region, appointments need to be scheduled, eligibility for it, particularly as we have a phased rollout, has to be verified. There are multiple steps, and then we can't forget the steps on the end of the individual. Are they willing to receive the vaccine? And I think that's actually where we're going to have the biggest challenge. The data I saw last night said that 58% of Americans were willing right now to take a vaccine, and there was even concern about the vaccine coming from medical professionals who we would like to vaccinate first. So we can have it, but will they come is the also big missing piece.
And perhaps it might not come from the public health professionals, but as John was mentioning earlier, perhaps it'll come from the corporations, right? Maybe airlines that say you need to have a passport, a vaccine passport to get on. Tom Keene was suggesting a tattoo on your forehead. What will the verification be like in terms of making sure you can disclose that you have been vaccinated to get yourself back into a public forum?
I'm not sure that is ever going to be legal in this country. I know that there are requirements for vaccinations for school enrollment, for example, but there are waivers to that for personal and religious reasons. I'm not sure that we're going to be able to overcome the, American feeling of I can be responsible for myself in order to require vaccination in any setting.
Well, Professor, let's finish there. Final question from me. The lesson from this pandemic, let's hope we never go through this again. But Western democracies, not just the United States and the UK, have really grappled with the idea of balancing restrictions with civil liberties. What's the lesson for Western democracies through this pandemic?
Well, I think the lessons are that we really need to promote collective action. It's because of this individualism, this, you can't tell me what to do. The government can't step in and regulate my behavior. You're not going to see in Western democracies drones flying overhead telling people to go back indoors in order to adhere. That's not likely to happen. But what really does need to happen is that we use this as an example of how badly things can go when all we think about is my liberties and me, and not our neighbor and our collective society. We have, in effect, prolonged the damage from this pandemic by this slipshod approach to managing it. And I hope that we can use this as a lesson.
Jonathan there, Northwestern University professor. I think that's the challenge, Tom, as we work our way out of this. What are the lessons and what do we do next time? And let's hope there isn't a next time. But on the issue of civil liberties, and I think the fear is a valid one, that when you give up civil liberties, civil independence and all of those things, Tom, that they chip away and they erode, and that maybe if you give them up, you don't get them back in quite the same way.
With the pandemic, it's going to be interesting. There's 2 ideas there, John. The first one is everybody's talking about COVID this, COVID that. We've had 3 or 4 COVID events. Do we get to a pan-COVID vaccine out there somewhere? And on the civil liberties, it's simple. There's going to be a lot of vaccine pressure.
Coming up on this program, Frederick Mishkin, former Federal Reserve Board Governor, as Chair Yellen lines up to become Secretary Yellen. This is Bloomberg.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise, but also the waves. The significant wave height, which is the top 1/3 of the waves, if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
From London and New York, this is Bloomberg Surveillance. From London and New York, here's the price action of the morning so far. Equities advancing. If you've got that cyclical trade on, that rotation, you'll like the look of this market this morning. Outperformance on the small caps, up 1.4% on the Russell. The Nasdaq is where the underperformance is. Once again, we advanced just 1/3 of 1%. Switch up the board in the bond market, limited move higher in yields, just a little bit higher on a 10-year by about a basis point or two, on a 30-year by about 3 basis points. The curve just a little bit steeper. But here's the picture I want to take you to just briefly. If you are bullish on the outlook for growth in 2021, this is where you want to see things move. In the FX market and in the commodity market. Switch up the board just one more time. And we'll start with the Aussie dollar, which is where the outperformance is, along with the Kiwi in the FX market in G10 today, but also in crude, in copper. Copper at a June 2018 high. Crude WTI, a post-pandemic shock high at 43.51, up a little more than 1%. And the likes of Goldman Sachs, Tom, think we've got more to go here, from 43, maybe out to 65 by year-end 2021.
Moving gold with a really difficult chart, 1809 the ounce of gold bugs in massive retreat here. The pro-gold people, I should say, as well. Almost a 2% move on gold. Right now, what we've tried to do is people our conversations from yesterday afternoon with not only people that know Janet Yellen, have worked with Janet Yellen, but understand the theories and bringing the theories over to policy. No one has done the movement of theory over to policy like Frederick Mishkin of Columbia University. His textbooks are definitive on this, and I might point out, hugely accessible. He is a former governor of the Federal Reserve System. Rick Mishkin, I want to go to chapter 16 of one of your books. I think it's the 47th edition. I can't remember, where it's simple. You talk about fiscal policy and government budget. How far removed will that be for Chair Yellen from the everyday of the Federal Reserve?
Well, the Federal Reserve is not supposed to focus on the budget directly because it's not in their remit. But clearly, it's very important in terms of the ability for monetary policy to do its job, and also particularly in the environment we're in now, where interest rates are near zero and monetary policy is less effective as a result. Fiscal policy really comes to the forefront. Janet understands this very, very well. That she's said the right things, which are as follows, which is that there really is a need for fiscal expansion right now. There's also, very importantly, a need for cooperation between the Federal Reserve and the Treasury. You couldn't get it better than Janet interacting with Jay Powell, so that's very good. But also, very importantly, which unfortunately our politicians are not doing enough, Janet has emphasized that although right now we need very expansionary fiscal policy, we have to worry about the long-run budget balance. And that's something that really neither the Republicans or the Democrats have done. But Janet gets it, and she's really a terrific person for this job. I couldn't think of a better choice for this position right now.
Professor Mishkin, we've gone from Jacob Lew, who I'm going to call a grizzled political wonk out of Massachusetts, to Mr. Mnuchin, who I'm going to call a Wall Street Hollywood type, with Mr. Trump. And now we go to a hardcore academic, something you'd be familiar with. Are we de-Wall Streeting the job? Are we moving Treasury away from Wall Street?
In this case, I think that's true, but I think the real issue is getting somebody who's competent. It's perfectly reasonable to have a Wall Street person in Treasury if they're really good at understanding policy. That's not always the case, but one of the things that's key about Janet, she's not just an academic. This is somebody who's been involved in policy work for a very, very long time. Yes, she was an academic for quite a while. I met Janet when she was an assistant professor at Harvard well over 40 years ago. We became friends then. So Janet has been in the trenches in almost all the key policy jobs, that she was a governor of the Federal Reserve, that she was also then a president of the Federal Reserve Bank in San Francisco, which is when I interacted with her quite a bit because I was a governor at the time, and we used to meet periodically. Actually, before every FOMC meeting, we'd always have a meeting, either at lunch or dinner together. And also she was the chairperson of the Council of Economic Advisors. She really understands policy. She's been involved in that world now, really very, very seriously at the top levels for 20 years. And she knows her stuff. And she's also not a partisan type person. Jen and I have some different political views, that she's to the left of where I am. But actually on economics, we really never had any big disagreements. She does the analysis carefully and thinks really hard about it and is super well prepared. And that's exactly what we need right now. Clearly, one of the things that's critical right now is to calm everything down, to get some straight thinking on what to do about the coronavirus pandemic, and also how we can support the economy during this next period of the next 6 months or so. And Janet is extremely highly qualified to do that.
The focus right now, Rick, is on how closely she'll work with the Federal Reserve, and quite clearly everyone says very closely. For you, how close is too close?
So too close is when the Treasury tries to dictate to the Federal Reserve and interfere with its independence. Janet very much appreciates the independence of the Federal Reserve, will be strongly supportive of it, and so in that sense, there's no issue at all. Having strong cooperation, it's always been true, by the way, that the Federal Reserve Chair and the Treasury Secretary meet periodically. I think they always had a breakfast. I can't remember how often it was, but I think at least once a month, or maybe once a month, they would have a breakfast together. That's actually critical because monetary and fiscal policy do interact. On the other hand, what you don't want is where the Federal Reserve independence is challenged. Now, that's not going to happen under a Biden administration. Trump was really awful on this. That his criticisms of Jay were just brutal, mean, calling him loco, saying Jay's an idiot, and so forth. That's done. Biden understands what was done during the Obama administration, but also before that, that the Fed works best and the economy works best when the Fed is independent of day-to-day interference by the politicians. That will continue. Janet is somebody who strongly believes in the independence of the Fed. She's not somebody who tried to dictate to Jay Powell. Instead, what you'll have is cooperation, which is exactly what's needed.
Although you'd have to say, Rick, in the back end of 2018, the president might have had a point when it came to judging and feeling out the market a little bit. We can put that to one side and maybe touch on that another day. I want to talk about policy making with you.
Look,
I had a feeling you'd want to jump in. Go on, Rick, please. Yeah. Please go on.
Yeah, you could be right that I actually advocate an easier policy during this period than the Fed was pursuing. But the issue is not the policy; it's the issue of interference, which then can actually cause problems. So pushing the Federal Reserve to do expansionary policy can lead to a rise in inflation expectations, which would be very damaging. So the way you talk, it's not just what you do, but the way you talk and the pressure you put can actually be very damaging. And in fact, most presidents before Trump, particularly since the Clinton administration, have understood that it's, including George W. Bush, understood that leaving the Fed alone actually helps promote a good, strong economy. But that doesn't mean that the Fed is always right. They do make mistakes. And with a crystal ball, we can always do better. But the key point is let them do their job. They've got a job to do, their technical people to do it. Janet fully understands that.
Rick, when it comes to making policy at the Federal Reserve, those decisions are grounded in economics. When it comes to making policy in the Treasury, it's economics and it's politics too. And I just wonder, Rick, when you start to think about trade, if you have a position on trade in the Federal Reserve, is your position on trade exactly the same when you are running the Treasury?
I think Janet certainly is going to be pro free trade in an appropriate way. And particularly, very important is if somebody's not playing by the rules, you want to be able to deal with them, but you don't then abuse your allies in that process. So if you really want to deal effectively with China, you don't slap crazy tariffs on the Europeans, which is what's been done under Trump. And this has been very damaging to our ability to actually get a more even-handed trading situation that will be beneficial to the U.S. and particularly with China. So I don't think that the positions, it's very true that a Treasury position is much more political, and so you have to deal with those issues. But on the other hand, almost all economists, by the way, very few, and those are the few that worked in the Trump administration, very few think that trying to close down our borders is a good idea. Janet is very much in the mainstream on that. I think it'll be very helpful in crafting a much better trade policy under the Biden administration.
Meanwhile, Rick, on a domestic level, there is a question of how she is willing to run the economy hot in tandem with the Federal Reserve, perhaps giving ammunition from the Treasury. And I'm wondering, from your perspective, are you surprised that the market hasn't priced in a higher, longer-term inflation rate on the heels of Janet Yellen's selection, based on what we know and based on her comments?
So I think the answer is they haven't, and I think there's good reasons not to. Janet's very, very good on this. I had a lot of interaction with Janet when I was the governor at the Federal Reserve. Both of us were strong advocates of controlling inflation and inflation targeting, and that Janet gets that. The key issue is that right now we're in a very different environment. It's actually a remarkable environment for somebody who's been a professor for now over 40 years and a monetary economist, which is the big problem of central banks is not that inflation is too high, it's too low. And so in this particular environment, it makes sense to pursue expansionary policy, both monetary and fiscal. By the way, there is a time when that could change, and in fact, having a very strong commitment to keeping inflation under control is important. I think that the Federal Reserve has moved to a procedure of so-called average inflation targeting, which could be beneficial, but has not been articulated in a way that I think is as helpful as needs to be to make sure that the commitment is as strong as ever. But Janet has always had a very strong commitment to controlling inflation. There's no doubt about that. Her statements, her policies, when she was chair of the Communications Committee at the Federal Reserve, when I was there. So the issue here is not that they should worry about too high inflation, but we do want inflation to get back up to 2%. And Janet understands that, and Jay Powell understands that. So that's why I don't think the markets need to be afraid of Janet on this.
Rick, come back soon. Always great to catch up, sir. Frederick Miskin there, the former Federal Reserve Board Governor. Thank you, sir. Thank you very much. Tom, do you remember that? Feels like a lifetime ago. Back end of 2018, when the president called Jay Powell a golfer, a powerful golfer who couldn't putt. That feels like forever ago.
I need to be careful what I say, but no, I guess I can't.
When have you ever been careful about what you say?
I'm being very careful about what I say right now. I will say that the President of the United States has been very active tweeting this morning, mostly having to do with Fox TV and some of Fox's more conservative competitors.
What did they do with Tom Keene in the last 10 minutes? Where did he go?
I'm hanging.
Why has he been so careful?
I'm checking your influencers. Your influence meter this morning is a little shaky.
Okay. From London and New York, this is Bloomberg.
With the First Word News, I'm Rishka Gupta. Things will get worse for the airline industry before they get better. That's according to the International Air Transport Association. The trade group estimates that airlines will lose almost $39 billion next year, more than double the forecast in June. And that's on top of a $118 billion deficit in the current 12 months. Airlines are hoping that the rollout of vaccines will lead to the lifting of travel restrictions. The formal transition of power between Donald Trump and Joe Biden has finally begun. The General Services Administration has acknowledged that Biden was the apparent winner of the presidential election, and President Trump has called on his agencies to cooperate. Still, the president says he'll continue to challenge the outcome of the election. Bloomberg has crunched the numbers to determine the best and worst places to be in the coronavirus era. We looked at where the virus has been handled most effectively with the least amount of disruption. Our COVID-19 resilience ranking has New Zealand as the best place, followed by Japan, Taiwan, South Korea, and Finland. The bottom 5 include the Czech Republic, Belgium, Peru, Argentina, and Mexico. And Tesla co-founder Elon Musk has now become the world's second richest person. According to the Bloomberg Billionaires Index, Musk's net worth soared $7.2 billion to a little less than $128 billion. He passed Bill Gates and now trails only Jeff Bezos. Musk ranked 35th at the start of the year. He's added $100 billion to his wealth, thanks to an incredible 523% rise in Tesla's stock. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
She's a University of California, Berkeley trained labor economist. And I think that that is where the greatest appeal is for Biden, is that he wants to ensure that he can get that unemployment rate back down as quickly as possible.
That was Danielle DiMartino Booth of Quill Intelligence and, of course, former advisor to the Dallas Fed president. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Coming up at the Open in about 15 minutes' time, we'll catch up with Jim Bianco of Bianco Research on what a Janet Yellen treasury is going to look like, if indeed we end up, Tom, with a Janet Yellen treasury in the years to come.
We will see, John Farrell. Good luck with that. Right now, the market's up 30. Dow futures up 324, and the VIX has come in solid this morning under 22, 21.93 shows the good times this is. I break a cardinal rule. I have a cardinal rule that I never talk about a book until it's released. I break that now. Cass Sunstein is at Harvard Law. You know I loved his book Impeachment, which never once mentioned Donald Trump. There is too much information, and yes, he writes for Bloomberg Opinion. But there will be a book next year. It's already must read, and it's not even written. The book is Noise, with a gentleman from Princeton, Mr. Kahneman, 70, and Cass Sunstein. Cass, wonderful to hear about this book of 2021. How are we going to get ourselves away from what we here at Surveillance struggle with every day, our addiction to the noise? How are we going to do that?
Okay, well, let's make a distinction, shall we, between noise like high volume, lots of stuff. How do you sort it out? The book that is out, Too Much Information, is really about that.
Yes.
The book Noise is about signal versus noise, meaning there's just so much variability. So if doctors are asked, do you have COVID-19? One doctor will say yes, another doctor will say, I don't think so. If you ask one grader whether the paper gets an A, the grader will say yes, and another will say no, it's a B-. That's the kind of noise that we're worried about, and it's a source of pervasive unfairness in the criminal justice system, in the welfare system, with permits and licenses. It's also a source of really high costs for companies when two people who are supposed to make the same decision, one says yes, the other says definitely no.
But Cass, so much of this is about the strange word from another time in religion called grace. And that grace is about uncertainty and understanding that we live within uncertainty. Anyone, those that agree with Mr. Trump and disagree with Mr. Trump, would say he majored in certitude. He knew what he was talking about. How do we escape our certitudes that are wrapped around too much information and our certitudes of noise?
Well, there's a great judge with a crazy name, a learned hand. Was this a prank by his parents who named him learned? But he kind of fulfilled the prophecy of learnedness and learned a lot. And Learned Hand said this during World War II, the spirit of liberty is that spirit which is not too sure that it is right. And that's kind of perfect, because you can be sure that you're right, as, you know, Democrats and Republicans often are, but they're sure. But things go sour if they're too sure that they're right. So there should always be a voice in a democratic society saying, you know what, the people who consider the other side, they might be right. And if that voice you let in your head, you become calmer, nicer, and that savage part of the human spirit kind of dissipates.
This makes sense, and at the same time, you're walking a fine line as we sort of infringe on the idea of freedom of speech and freedom of decision-making, and I think that there probably would be a large swath of the nation that would say, this is the problem, that academia, which tends to be more liberal, wants to weed out things that's wrong and not necessarily let people think their own thoughts, and this is really brought to the fore with Twitter and Facebook's recent filters on President Trump's tweets, as well as other certain information that's been disseminated. How do you walk this line? How do you create a filter that is fair and gives the impression of fairness to people looking for independence and freedom?
It's a great question. So let's think of three different categories. One category, which my Too Much Information book, that's not a very likely title for a book, by the way. I'm not sure that's a best-selling title. But the idea behind too much information is, first, the government's taking too much information from us. So it is imposing 11 billion annual hours and paperwork requirements on the American people. It may be nurses, it may be doctors, it might be patients, it might be people who want to build things, and they are being hammered by paperwork requirements. This is especially bad in a period of COVID-19. So that's not a free speech issue. It's an issue of imposing burdens which are often like walls between the American people and things that they have a right to. The second thing is disclosure of information that's mandatory. So if you get a medicine, it might have 7 pages of side effects information, which you'll never read. Or if you get a mortgage, you might be drowning in stuff. Or if you buy a product at the grocery store, there might be a ton of things there which are so complicated in terms of information mandates that you're not going to benefit from them. So information mandates is a second thing, which is often excessive and often kind of clueless, and that is not a free speech issue.
Well,
then there's a third thing, which is, Twitter and Facebook having warnings and disclosures as part of their product. That's actually technically not a free speech issue. In fact, technically not, because Twitter and Facebook aren't governed by the First Amendment because they're not government. And that's how our Constitution was set up. Mm-hmm. And itself a big positive in terms of freedom, that a private social media outlet doesn't have to worry about the things the government has to worry about. Now, having said that, there are free speech issues in the non-technical sense that it's completely fair to discuss that private actors often raise.
Cass Sunstein, thank you so much. Just can't say enough about too much information, and to come next year with Professor Conran of Princeton Noyes as well. Cass Sunstein at Harvard Law. Lisa, we've got to go back to the equity markets, which is just remarkable. The VIX now under 22 solid, 21.94. That'll be really interesting to watch. I mean, Lisa, we are so far across the reach of this pandemic from the almost the delinkage of this crisis with what we see within the equity markets. I can honestly say I've never seen it.
Yeah, the near term versus the long term, right? The near term looks pretty bleak. The long term, people are pricing in that we're all fine and good and taking airplane rides to Moldova to get oil or whatever it was. What were you getting the other day? Sea salt? Where you're really into salt, right? You're going to take a trip to Europe just for the salt. Look, honestly, I think that the conviction that people have that we're heading toward brighter days is what's pervading the markets. The question is, how big will the bumps be and how much scarring will there be from those? And that really is the uncertainty going forward.
And what we learned today, clearly, folks, is the idea of rotation and the many different arguments, the nuances of rotation, including Gina Martin-Adams of Bloomberg Intelligence. And I do have to mention John Golub, with a very different view at Credit Suisse as well. Again, futures up 29, Dow futures up 316. The level on the Dow, 29,863. And some tangible dollar weakness, and I don't want to write home about it, but nevertheless, tangible dollar weakness this morning. And taking the headline, wow, can we get a 1,700 print on gold? 1,800 down $30. On the airlines, Mr. DeJuniak, the 11 o'clock hour. This is Bloomberg.
once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the open starts right now, 30 minutes away from the opening bell, with futures advancing 30 points on the S&P. We begin with the big issue, the transition formally beginning. The GSA acknowledging Joe Biden, the apparent winner of the US election, granting the president-elect access to federal agencies, intelligence briefings, and $6 million in funding. President Donald Trump calling on his agencies to cooperate, tweeting the following: "I'm recommending Emily and her team do what needs to be done with regards to initial protocols, and have told my team to do the same." The Biden cabinet already taking shape, preparing another round of appointees today, following a slew of nominations Monday. Wall Street focusing on one in particular. Former Fed Chair Janet Yellen, widely reported to be America's next Treasury Secretary.
In a way, the markets are sitting thinking, gosh, transition's coming.
The market's right to cheer this news.
They know what they're likely to get with Janet Yellen as the Treasury Secretary.
Someone who knows Washington policy pretty well.
She will have great respect for the independence of the Fed.
She's been very good at trying to build relationships across the aisle in Congress.
She's going to be much more subject to the political winds in Washington. Clearly, Janet Yellen's appointment doesn't alter the mathematics in Congress. I don't know that we know how well she can navigate those political waters, choppy as they may be.
She'll be a very effective Treasury Secretary.
I'm hoping Janet Yellen takes a page from good Treasury secretaries.
The United States would be reestablished very quickly under a Yellen Treasury Department.
Let's bring in the Bloomberg team. Bloomberg's Kevin Cirilli and Shonali Bassett. Kevin, I want to begin with you, sir. Do we just assume that if this goes ahead, she gets confirmed?
Yes, look, I think based upon the conversations that I've had over the past couple of weeks here in Washington, Jonathan, there's no question that former Fed Chair Janet Yellen, who, mind you, was able to get confirmed already through a Senate approval process when she was named to the Federal Reserve in 2013, is likely going to face that as well in the Republican-controlled Senate. She had really strong bipartisan relationships when she was overseeing the central bank in terms of that dynamic. And so it's fascinating because flashback to 2013 when the nation was emerging from the 2008 financial collapse and issues that came up during her confirmation hearings pertaining to too big to fail, audit the Fed, remember that? I would anticipate some of that is going to come up, but largely the focus of her confirmation hearing will likely be for senators having an opportunity to ask about other parts of the job that we don't know where the former Fed chair stands on, pertaining to sanctions, pertaining to tariffs, pertaining to international risk and international terrorism. Because remember, the Treasury Department also oversees that, as well as CFIUS. And so all of that I would anticipate is going to come up. And just a quick note, just in terms of the Biden transition, they are anticipated to announce further picks today. But here in Washington, D.C., the names that were announced yesterday and as well the names that are expected to be announced today are a return to sorts, not just to the Obama administration, but a return to the familiarity of how diplomacy is conducted geopolitically. And that's based upon conversations with not just Democrats, but also Republicans. Jonathan.
That's part of the dollar weakness story as well in the market. Kevin, great to catch up, sir. As always, Kevin Surley down in D.C. Another busy one for Kevin ahead of the Thanksgiving holidays. Wanted to catch up with Bloomberg's Sonali Basak as well. Sonali, because I think it's really, really important. The last act over at the Fed from Chair Yellen was not a monetary policy decision. On the way out the door, it was to stick the boot into Wells Fargo. What are you hearing?
That's exactly right. So her approach to the big banks over a longer period of time in conjunction with the other regulatory agencies. And by the way, John, not just the banks, but the non-banks, the shadow banking system that many people have been concerned about from March until now will be a main question. But over the last 24 hours, Kevin made a very good point here. What my sources have been wondering about is how she will react in the medium term and the longer term to Biden's economic policy. So that is alternative energy sources, that is the infrastructure plan, but then in the even longer term, how she will behave as a world economic leader in relation to G20, G7, IMF, World Bank, and restoring a lot of these global relationships that the U.S. has had, in addition to how she will treat sanctions, which has been an increasing function of the Treasury Department and of big concern to the banks.
Sonali, before we let you go, a story crossed the Bloomberg about 4 or 5 minutes ago on Deutsche Bank and work from home. I imagine the interest in this story for our audience is going to be sky high to the moon through the rest of today. What are they saying?
So Deutsche Bank is now saying that they may have more people more permanently work from home. It's not surprising from Deutsche Bank only because they were earlier on than the other banks to say, okay, more people can work from home more permanently in this second wave of this crisis. Plus, they are cutting costs and reducing a lot of their real estate footprint. But as you know, John, for Wall Street, what a move. This is not something most banks are very comfortable with, this idea from working at home. They want people to come back into the office.
I don't know many people that still want to work from home even twice a week that work in the financial industry right now. Sonali, it's great to catch up. As always, Sonali Basak, thank you. Back on topic, Jim Bianco of Bianco Research questioning the market's optimism surrounding Biden's Treasury pick, writing the following. Risk markets are celebrating Yellen in a way that suggests she's heading both the Fed and the Treasury. They're celebrating an easy money Treasury secretary, but technically the Treasury doesn't set monetary policy and it's supposed to not influence it. Jim joins us now for more. Jim, your early take, please, on what's about to develop, possibly in the next 24 hours and maybe even the next coming years.
Yeah, Janet Yellen has not been appointed as the Federal Reserve Chairman. That seems to be the mistake that everybody is making right now. I saw your interview about 20 minutes ago with Rick Mishkin, and I couldn't tell if he was promoting her for Federal Reserve Chairman or for Treasury Secretary. Those are two very different jobs. Her skill set is well qualified to be a Federal Reserve Chairman. As a diplomat, as a chief economic negotiator, if that's what the Biden administration wants, her skill set is not Christine Lagarde's skill set when it comes to negotiating things like budgets or sanctions or tariffs or talking with other international world leaders. Now, she may grow into the job, but it's a big unknown right now. I think all Wall Street sees is easy money and that they're happy with this idea of easy money. So over the short term, they're going to celebrate this. But over the long term, there's going to be a lot of questions as to where she fits in that spectrum.
Well, I think more importantly, Jim, it also means that they recognise that we can't have a premature declaration of success like we did last time around, both on the monetary policy side and I think as well on the fiscal policy side. Does that strike you as a little bit more constructive, the fact that someone who has been conditioned by the previous cycle, that knows they probably should have ran it a little bit hotter, is now in a seat where maybe she can dictate policy on the other side of things?
Yeah, you would hope so. And it comes down to a big question is the Treasury Secretary is an important part of the economic voice of the incoming Biden administration, but she's not the only voice as well, too. There is going to be some internal negotiation within the Biden administration is what exactly do they want her to do? What exactly do they want from the economy? And is everybody within the Biden administration on exactly the same page with Janet Yellen? And then will she go out and sell it as if it's part of her own policy? We'll have to watch and see if that actually happens.
Jim, I've got to say, a bit of a blind spot for me is the international outlook from the Treasury Secretary, if it is indeed Janet Yellen. We know a lot about the monetary policy story. We know a lot about the fiscal policy story. You can just read through the transcripts, the different interviews she's done over the years on that front. Jim, we've just had a drip feed of her views on trade, and I wonder how those views develop when you sit in a more political seat and you start to face the likes of China and Europe and elsewhere, what that relationship looks like.
That's a big unknown. Not only do you have to consider that, too, but let's assume that the Senate stays Republican, and then she's going to have to articulate that with Mitch McConnell in the Senate as well, too, and try and strike a balance between all of them. If that's what the administration wants, as her being their chief negotiator in all of this, in addition to talking to the Chinese, in addition to talking to the Europeans, in addition to talking to the Japanese as well, too. So it's going to be something we don't know. We really don't know where she falls down on all of this. She's really not had to do that in any of her previous jobs. Doesn't mean she can't do it. It's just a giant unknown at this point.
Perception is everything at this point then, Jim. There's so much we don't know, but you know the stories start to get told and the consensus builds and people start to get a firmer grip of those stories and they start to trade on them. And I wonder what kind of stories we're going to hear that will develop and maybe be reinforced in the months to come, Jim. One of the trades right now is a weaker dollar story. They take the news of the last 24 hours, they plug it into that trade and say more fuel for it. Does that resonate with you, Jim?
Yeah, I think so. I think that the short term, over the next several weeks, is that they're looking at closer cooperation between the Fed and the Treasury, as I've even termed it, almost a merger between the two of them, resulting in easier money, resulting in possibly a reversal of the Mnuchin Trump CARES Act, taking the money back, sending it back. And that has been cheered by risk markets as we move forward from here. Okay, I get that. But that's not the only thing that the Treasury Secretary does. And beyond, after that initial euphoric trade is over, then we're going to have to figure out what else she stands for and where else she's going to go.
Jim Bianco of Bianco Research. Jim, a lot of unknowns there. Great to catch up. Enjoy Thanksgiving, sir. A happy Thanksgiving to you and the family. In the FX market, the dollar just turning positive. That dollar weakness trade, I know a lot of you have got it on. Kit Jukes of SocGen looking for 127 on euro dollar, back end of 2021. It's been a difficult one to develop in the last couple of months, in G10 at least. The more broader BBDXY, much, much weaker on that story, largely because of the Asia influence over in China, and EM as well, with the Mexican peso in the mix. But in the here and now, dollar weakness to start the day, but as the day has progressed, as this session has grown older, that dollar has got a little bit stronger. Let's get to the market desk and get some movers. 20 minutes out from the opening bell with futures still elevated. Here's Abigail.
Hi there, John. Well, we do certainly have a tailwind for stocks, global stocks and futures here in the U.S. Lots of different reasons, but let's keep it simple because there is reason to think that when we take a look at these movers, that a lot of it is the reopening rotation and the cyclical trade that we've seen. American Airlines, after gaining more than 8% yesterday, up another 4.5% on hopes that folks will be traveling more soon. Occidental Petroleum up nearly 9% today after gaining 22% over the last 3 days. That catch-up trade for the beaten down energy trade plus oil trading higher. The same deal for banks. Take a look at Wells Fargo, up 3.8%. The yield curve is steepening again, plus the Janet Yellen expected nomination and upgraded by Raymond James to outperform. And then finally, where is the money coming from? Well, Apple yesterday, John, had a really bad day, down about 3%, breaking technical levels. Today, a tiny bit. It will be interesting to see whether or not that can hang on, or if we continue to see the move into those cyclical sectors and names and out of big tech, John.
Abigail, thank you. Coming up on the programme, governors across the country tightening up restrictions, issuing executive orders to slow the spread ahead of the holidays. That conversation up next with Nuveen's Brian Nick. As we count you down to the opening bell, 18 minutes away from the open. Equity futures elevated on the S&P up 0.7%. The Russell just absolutely ripping over the last month, up another 1.85% in early trading. This is Bloomberg.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into this SPAC thing a little bit before it became such a hot method of going public.
When you combine all those previous stimulus programs, $40 billion reached the people of New York City. All of those good investments are now wearing off, and people are running out of money. If there's not a stimulus, the state of New York is going to be in dire, dire shape, and unfortunately might have to pass on cuts to localities.
New York City Mayor Bill de Blasio warning of a potential layoff series without further action from Washington. Governors urging caution ahead of the Thanksgiving holiday with virus cases spiking across the country. LA County reporting record new cases on Monday, putting it on the brink of another lockdown. North Carolina issuing an executive order extending mask mandates, closing indoor bar service and limiting occupancy in restaurants and stores. Michael McKee of Bloomberg joins us right now for more. Mike, more restrictions into Thanksgiving.
Yeah, it's kind of funny, John. Wall Street seems happy this morning. They're looking ahead to a vaccinated world. But the warnings from policymakers are we've got several months of pain ahead, and we're getting that validated by the data. 59.2 million cases of COVID worldwide, and that's 1.4 million deaths. Here in the U.S., 12.4 million cases now, almost 260,000 deaths. And at the current rate of increase, we'll hit 300,000 by the end of the year, the virus running unchecked. So policymakers are taking action. You mentioned Los Angeles, a 5-day average of more than 4,500 cases a day. And they said last week that's enough to bring on a lockdown. So that is likely coming there. New York has put limits on restaurants and bars in some areas, and the city does face that big budget shortfall. You heard what the mayor said about New York being in dire, dire shape. Hong Kong shutting bars, nightclubs, and bathhouses from Thursday until at least December 2nd. And cases are climbing in Japan. The government there trying to decide whether it needs to close or limit stores and restaurants. We should also note, since I'm the Eco Guide, Germany's IFO index of business confidence fell a lot more than expected today. Predictions are that country may see a recession in the first quarter. One bit of good news, bad news, and this is maybe good news for you, John, since you're in London. The Prime Minister, Boris Johnson, confirming he's going to lift the lockdown orders there and replace it with a tiered system of restrictions in different regions. England is going to chop its quarantine time for arrivals as well from high-risk countries if they take a test. On the bad side, don't expect a spike in passengers. The International Air Transport Association says the airlines around the world are going to lose $39 billion next year, more than double the forecast in June. That's on top of losing about $120 billion in the current 12 months, which is up 40% from the prior outlook. Together, the loss is 5 times what the airlines accumulated during the 2008-2009 recession. I'll just close by noting the World Health Organization says we're going to have to be putting up with this pandemic and taking steps to avoid getting the COVID virus well through next year.
I'll pretend I didn't hear the last bit. Mike, you're more than just the eco guy. You know you're more than that to me. Michael McKee joining us on the economy and a whole lot more. Nuvi's Brian Nick weighing in on the situation, the dilemma facing local governments throughout the pandemic, writing the following. Policymakers will be reluctant to force businesses to close, knowing they could be ordering a death sentence to their local economies. A gentle rotation into cyclicals still makes sense in a world more likely to normalise next year. Brian joins us now for more. Brian, it's my question of the moment. What's normal?
I think normal is at least a return to former levels of revenue for a lot of these companies that are in industries that just can't function in the presence of the virus. So travel, leisure, hospitality, these are areas that, we can't pull forward the effects of the vaccine. We're pulling forward good news in terms of the market pricing in the vaccine for next year, but we can't actually pull forward the effects. So people are still largely not getting on airplanes, not staying in hotels to the same extent that they were. And I think that the bigger risk in the near term is for businesses that can function during the pandemic, but simply aren't going to be able to because the customers aren't showing up because they're concerned about getting sick. So those businesses are, we're not taking care of those businesses. That's what I was referring to when I said it could be a death sentence to order these businesses to lock down. So my sense is we're going to go forward here in the United States without widespread mandatory business closures because you simply can't ask a business to close if there's no support from the government to help them reopen when the time comes.
That's the problem right now on the policy front. So, Brian, let's think about it. If you want to maintain that cyclical tilt, that's your call. Where do you want to lean? What's the regional bias there? Is it still the United States or is it more towards Europe, which has gone through the lockdown process and is starting to reopen now with vaccinations set to start on a similar time frame?
Yeah, I think over a short time period, I think Europe does, make some sense. It's underperformed all year, mainly because it doesn't have that large tech sector that the U.S. does. But if that's not the sector that's going to be in vogue next year, as we kind of look forward to a more normal economy that has a wider and broader participation from more different types of companies and those companies' stock, I think it can make sense to look at Europe. Certainly, we're looking at areas like real estate in Europe. I think Japan also is getting a look, and broader Asia from our equity strategists, because these are areas that, again, haven't had to deal with as much in terms of the virus. They still obviously have that contagion effect from economies that are weaker across the world. But as they get more tied in, for example, with China and that broader region in some of these trade deals, I think that makes more sense to look, moving forward as companies that are relatively more insulated from the pandemic, at least for the time being.
Brian, we've got to do 2 things on a program like this. You've got to work out what the trajectory for economic data looks like, and then you've got to work out how investors will respond to that. It was interesting last week, retail sales downside surprise, jobless claims the wrong kind of upside surprise. Then yesterday, US PMIs from market, really tidy, really decent, really solid. How are you going to navigate that story in the months to come when many people do anticipate that won't be the story? The PMIs from yesterday will not be extrapolated out through year end, that we could see some weakness into Q1.
I think that's right. And while the PMIs are something that the markets look at, I'd much rather look at the hard economic data, which is showing us that the U.S. economy is slowing down, I think creaking a little bit under the weight of the virus. But what's interesting really about the PMIs is the divergence between the countries and the areas of the world that have reinstituted some kind of lockdowns. PMIs are extraordinarily sensitive to lockdowns. They're less sensitive to the virus, which is now worse in the U.S. So as long as the businesses stay open, even if their virus is sort of spreading uncontrollably, it seems like the PMIs do okay. I'm not sure that's going to be true of retail sales, perhaps not consumer confidence, and perhaps not the labor market, which is going to depend very much on whether people are willing to come to work and whether businesses are willing to hire new people. So I look every week at these continuing claims data. I'm going to be looking tomorrow at the income and spending data from October. That'll give us a bit of a hint on how the fourth quarter started. Most of the October data looks okay. I'm more concerned about the November, December, January data. I suspect we're going to get 1 or 2 negative payroll prints in the next couple of months.
Given where we're priced right now, are you comfortable sitting here in cyclicals through the prospect of a couple of negative payrolls prints, Brian?
Yes, because we are balanced, and we're talking about a relatively short period of time. We're in a dark tunnel. We still think there's a bright light at the end of that tunnel. So as long as our time frame is not 2 or 3 months, we have a 6 to 9 to 12 month time frame. I do think this trade comes good, and I think it does. It's also you're sitting in areas of the market that are obviously have done less well and are less attractive or more attractively valued. So you have some sense that you eventually get paid to be in these positions when the economy is able to reopen. But the next couple of months are going to be bumpy. That's why we're pretty balanced. We don't have a cyclical tilt. We've just been adding to cyclicals, basically taking off our underweight.
Brian, great to catch up, sir. My best to you and the team ahead of Thanksgiving. Happy Thanksgiving to you. Brian Nick of Nuveen. Coming up on this programme, the analyst action you need to know. That conversation just around the corner. And later, UBS's Laura Kane joining us at the opening bell, making a case to rotate into the laggards. And a conversation about new energy and old energy after a huge rally in EVs in the last couple of days, for that matter, through the whole of this year. That's coming up shortly. This is Bloomberg.
Können Sie einmal noch ganz kurz zu uns kommen? Ganz kurz.
Davor stellen.
Minutes away from the opening bout. It's Tuesday morning. Good morning to you all. Here's the state of things. A beautiful New York City with futures advancing about 30 points, up 0.75%. That's the story in the market. Here are your morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up with Raymond James upgrading Wells Fargo to outperform from underperform. $32 price target. The analysts seeing positive catalysts on the horizon with headwinds bottoming. That stock up by almost 4% in early trading. Your second call from Oppenheimer upgrading General Electric to outperform a $12 price target. The analyst writing that the pace of improvements is picking up with a turnaround gaining traction. We're up by a little more than 5% there. We're flying going into the open. And finally, Argus upgrading target to a buy, 205 price target. The analyst highlighting the retailer's growing relevance among shoppers after posting significantly stronger than expected comparable sales, up there by almost 1%. Up next on this programme is the era of big tech dominance coming to an end. UBS's Laura Kane joins us at the opening bell, making a case for going small and cyclical in 2021.
For each side to understand the sensitivities of the other.
Former U.S. Secretary of State Henry Kissinger said the incoming Biden administration should move quickly to restore lines of communication with China that frayed during the Trump years, or risk a crisis that could escalate into military conflict.
Unless there is some basis for some cooperative action, the world will slide into a catastrophe comparable to World War I, with a technology that is even more difficult to control than the technology of the period then.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
A couple of weeks ago, Deutsche Bank and the research team thought about the idea of maybe taxing people more if they worked from home, and then, as we understand it, Deutsche Bank, the executive team, the C-suite, weighing the possibility of allowing Deutsche Bank employees to work 2 days a week from home. I wonder what the research team now think about the prospect of that and paying higher taxes. Maybe we can ask them. The opening bell ringing in New York City. Equities advancing 27 points on the S&P 500, up 0.75%. Call it 0.8%. Outperformance clearly, though, in the small caps. The Russell up 1.4% going into the cash open. Switch up the board into the bond market we go. Let's take a little look. A sneak peek at Treasuries. 2s, 10s, 30s. Yields up on 10s and 30s just a little bit. The curve steeper just a little bit. Up a basis point on 10s to 0.8668%. And a dollar weakness story from earlier this morning. We give some of that up. Euro dollar 118.53. Just can't get through 119 and hold it. Through 119 yesterday. Back down to about 118.50. Where you do start to see some price action, get my words out, in a commodity market. Crude, WTI, post-pandemic shock highs on WTI at almost $44, up by 1.95%. That moves cross asset. Let's get to the market desk and get you some movers and bring in Katie Greifeld. Hey, Katie.
Hi, John. Well, plenty of action this morning, and let's start with Tesla. It's up about 5% already today, and it's gained about 33% since it was announced that Tesla would be added to the S&P 500 later this year. And that's helped founder Elon Musk pass Bill Gates as the world's second wealthiest person. Now, going down the board, General Electric is up today, as well as the company's turnaround continues to pick up momentum. It announced a small acquisition last week after 2.5 years of selling assets, and that's earned an upgrade from Oppenheimer yesterday. Now, on the earnings front, Dix is a little bit lower today, 2%, and that's even though it reported this morning that comp sales rose a record 23.2%. But obviously the momentum is coming out of that stock. You also have Best Buy lower as well, even though it beat estimates across the board. But the stock is sinking after the company provided no future guidance on the upcoming holiday season. Now let's check in on the cyclical trade. Your reopening stocks are broadly higher this morning. United Airlines is leading travel stocks as that vaccine optimism continues to build. You also have AMC soaring up about 10% at the open, and that's after gaining 12% yesterday. Moving down, you have retailer Abercrombie & Fitch also sharply higher after beating earnings per share by a huge margin. Its EPS was 76 cents. That is, after estimates that it would be flat last quarter. And I'll note that the apparel retail index is at its highest level since February. Finally, we have action camera chip maker Ambarella up over 9%, nearly 10% after lifting its outlook, and perhaps another sign that consumers are getting ready to venture outside. Back to you, John.
Katie, thank you. Great work. Bloomberg's Catherine Greifeld there on a story in this equity market at the open. About 2-3 minutes into the session, let's peel it back a little bit. The Russell outperforming, the small caps up by about 1.3%. The sector composition of the move this morning, this Tuesday morning, we advance across the board, pretty much every single sector on the S&P 500 in positive territory. The financials up by 1.6%. Steeper curve helping out that story this morning, though it hasn't needed the steeper curve over the last month, really. It's just been a massive rally into the cyclical trade, and the banks have been part of that, up almost 20% over the last month. But the huge move on the session on the month, energy, up by 2.8% this morning. And on the month, heading for its biggest monthly advance, possibly, quite possibly on record, getting a boost from the so-called new energy stocks as well. Tesla's relentless rally propelling its peers, with electric vehicle stocks surging as well. So it's the new energy, old energy story. Abigail Doolittle, both of those stories almost hand in hand, absolutely flying.
John, it's simply extraordinary, both, as you're mentioning, old energy and new energy really just taking off here in the month of November. A real FOMO-like feeling to the trading quality. Really surprising, actually, for old energy, not so much for new energy. Let's take a look at what we do have on the month for old energy. The S&P 500 Energy Index, as you were mentioning, up more than 30% this month, heading to its best month ever. Simply extraordinary, really on this reopening optimism. Oil, of course, up more than 20%, so trading higher in sympathy with oil. Now, yesterday, the energy sector up 7% on its own. The S&P 500, a little bit of a lift, but it's only 2.4% of a weighting, so that's why we don't have more of a lift. But names like Occidental, Devon Energy, Exxon, all taking off. As for new energy, let's take a look at an ETF, a new energy ETF on the year. A double at this point, up more than 102%. And we compare this to an S&P 500 Global Oil Index, old energy, down on the year by about 34%. It's clear where the bet is going, and the last 2 months have really been hot for new energy. A lot of this, particularly over the last few weeks, having to do with President-elect Joe Biden, the expectation that his administration will be friendly to new energy. Not surprisingly, John, it is helping out electric vehicle makers. A redhead just crossed the Bloomberg moments ago, saying that Tesla's market cap is above half a trillion for the first time ever, or above 500 billion. Wow. So there you see it. Big gains for electric vehicle makers. New energy and old energy really taking off, John.
Abigail, thank you. What a run it's had. Old energy, new energy. One's got a secular tailwind behind it. The other one's got a headwind in front of it, but it's a catch-up trade. You've got to draw a distinction between the two. What is going on here? Laura Kainer, UBS Wealth Management, expecting the laggards to lead the way, fueled by a broadening recovery and vaccination progress. The team at UBS seeing the cyclical rotation continuing into 2021 and writing the following. We expect the more economically sensitive markets and sectors, many of which underperformed in 2020, to outperform in 2021. Our preferred areas include small and mid-cap, select financial and energy names, and the industrial and consumer discretionary sectors as well. Laura, I'm pleased to say, joins us now. Laura, can we just start on the energy, please? Please, Laura, can you walk me through your thinking around the old energy story that we see in the energy players, oil, etc., and what we're seeing with the EVs as well?
Yes. So, hi, Jonathan. First of all, thanks for having me on today. And I would say that this old energy, new energy story actually makes a lot of sense to us in terms of our outlook for 2021. So we've been calling 2021 a year of renewal for two reasons. One, we're going to be recovering from this pandemic, but secondarily, we've seen a number of transformative trends set in motion by this pandemic. And among those, I would highlight digitalization trends and also the shift toward a more sustainable economy. So when I think about this idea of old energy versus new energy, you have old energy exposed to the recovery from the pandemic. So we expect to see energy demand trends move in a positive direction as things like travel resume, and overall we see business and consumer activity picking up into 2021. And then shifting over to this idea of transformative trends and the secular side of things, we do see this momentum around a more sustainable economy. We have a positive view on green technologies that are exposed to areas like clean energy, EV, and even energy efficiency trends. And I would highlight the Biden administration, yes, is an incremental positive, but we've also seen a lot of positive indicators coming from around the globe. So many countries have announced more aggressive emission targets in 2020, and also we've seen the EU put in place some pretty sizable green spending plans as they recover from the pandemic as well. So putting it all together, this movement that we're seeing across both old and new energy actually makes sense in the context of some of the trends we see for next year.
Laura, do they operate on different time horizons, though? Just as far as new energy, old energy is concerned. I mean, I'm trying to work out whether the old energy story is just a catch-up trade that loses some steam going into 21.
Yeah, so I would say that the old energy is more of a catch-up trade. You're right. Right now, we are actually neutral on the energy sector in that 6 to 12-month view. I think that there is still some risk to the downside. So we're going to see this ongoing narrative of vaccine versus virus play out, especially in the very near term. So there is certainly some risk to that story. But looking out to mid-2021, we have about a $50 price target on oil. So we do think that the energy markets are going to continue to come into balance as we get into the middle of next year. And then in terms of some of the more secular trends around, clean energy, new energy, yes, that is a longer term time horizon, but I think we are going to see, given some of the more near-term catalysts on the policy front, we are going to see some movement in those areas. We're already seeing it. And I would add to improving economics. That's a more long-term trend. As clean energy becomes cheaper, as battery technology improves, those are some of the long-term catalysts that I would expect to see in more of that new energy domain.
Laura, that's the long time frame, the secular growth story that people have just piled into over the last 12 months, and they expect it to continue as well. One thing that's been left for dead over the last few years has been the FTSE, the UK. And I keep coming across notes, Laura, suggesting that UK equities have got some serious catch-up to do from here. Does that resonate with you, Laura?
Indeed, it does. So we do have a most preferred view on UK equities. You're right. It's the catch-up potential. It's the extraordinarily cheap valuations on a relative basis. We do see a lot of room for improvement. Also, with investments in the UK equities, you are getting that exposure to the global recovery. You're also getting exposure to the recovery in energy prices. So there's a lot of positive undercurrents there at some pretty undemanding valuations. So we do have a positive view on UK equities, despite the overhang, of course, from the Brexit uncertainty.
Laura, fantastic to catch up with you. Come back soon. I'd love to talk more. Laura Kane there of UBS on this story. Morgan Stanley looking for 17% upside for the FTSE 100 through 2021 versus just 10% upside for the MSCI Europe. The bullish notes around the FTSE, not the UK, I should be specific, the FTSE 100, the market in the UK, really piling up on my screen over the last couple of days. Want to head back to the market desk and get stateside with Abigail. Hey, Abigail.
Hi there, John. Well, we really have a bullish bid for some of the equity indexes here in the U.S., the S&P 500 and the Russell 2000 in particular, that small cap index hitting yet another record high, a string of them after not having one since 2018. On the other hand, you have the tech-heavy NASDAQ down just slightly. So let's break it down. Clearly, the rotation trade is back in business, staying in business, actually. We have the airlines and the cruise line operators operators higher on hopes that the economy is going to improve. Folks will be back out there traveling as the vaccine gets into the system. We also have those new energy movers. Fuel cell, take a look at that, up 13%. Plug power had been higher earlier, up 1%, but it's not just the new energy, it is also the old energy, along with banks. That part of the cyclical rotations in play. Wells Fargo, one of the top stocks on the day. This, of course, as the yield curve continues to steepen. JP Morgan is another big winner for banks. And then Devon and Apache, these energy stocks just continue to soar. As we were talking about, the energy sector headed toward its best month ever. Really, that's the degree of the catch-up trade. And then tech, however, John, Apple, NVIDIA, and Zoom, those stocks are lower. That is where the money is coming out of.
What a run that energy trade has had over the last month. Abigail, thank you. Awesome work as always. Abigail Doolittle there at the market desk. Coming up, we've had about 45 minutes of happy talk. Let's talk about defaults sending shockwaves across China's credit markets. That conversation up shortly with Mike Contopoulos of RB Advisors. From London and New York, this is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
China's one of the few economies that will grow this year. So while maybe the longer term remains quite a challenge for them, there certainly are opportunities there. There are some, we think, interesting opportunities there in China, both from a growth perspective as well as in fixed income.
Risk appetite fueling a rebound in emerging market equities, touching a fresh record high. and heading for their biggest monthly advance since 2016. I want to bring in Bloomberg International Economics and Policy Correspondent Mike McKee for more. Mike, that's the equity story. There's also some interesting things happening with credit, specifically in China.
Yeah, let's start with emerging markets in general. Damian Sassauer and our EM team putting together an outlook for 2021 that's relatively positive for emerging markets in general because they say creditors are going to be able to look past the pandemic and start to see an increase in the fundamentals, and the reduced policy uncertainty should support growth there. Risk premiums are going to compress as currency volatility subsides, and there's going to be that always and ever-present search for incremental carry going offshore. China, though, different question. A reality check there after years of ramping up on corporate debt. Corporate debt defaults hit 100 billion yuan for the third consecutive year. The surge in missed repayment obligations the past 2 weeks, driving onshore delinquencies to $15.8 billion, according to Bloomberg data. The offshore figure, $8.1 billion. Investors are running scared now in the world's second largest credit market. Among the most notable losers you can see there, state-owned companies. Investors have been concerned about whether or not the government is going to let them default. They haven't missed debt payments, and all four are rated AAA by Chinese domestic rating firms. But a surprise default by a state-owned Chinese coal producer last month cast doubt on the guarantees that have long underpinned the idea that you could just buy into the government-backed borrowers, crack down on unregulated lending that the government put in place, shadow banking, and tighter rules on asset management, making it harder to borrow there as corporate debt to GDP surged to a record 160% at the end of 2017 and still rising, John.
We learned the hard way a long time ago, didn't we? They're AAA until they're not.
They're not.
Mike, great to catch up, as always. Mike Contoboulos of RB Advisors saying China debt defaults are healthy. He says the following: debt defaults will be part of the move to free markets as the government lets bad debts fail. This is a healthy, if not painful, way to de-lever. This has been an ongoing issue and will likely continue to be one as long as you have a transition occurring in China's economy. Mike joins us now over the phone. Mike, great to catch up, sir. So no need to worry about contagion coming from some of these names.
Well, thanks for having me on, John. I think, as we sit back and think about emerging markets broadly, I'm glad that you separate China from the rest of broader EM, because they really are two very different stories at the moment. In China, as Mike mentioned, you have this transition to free markets and the lack of a backstop from the government that you've probably had in the past. And quite frankly, I think that is incredibly healthy. Right? The government doesn't want to tolerate bad actors. Remember, too, up to this month, the number of defaults of SOEs was pretty consistent with past years. But what we had started to see was that deal docs were pretty egregious, and Vice Premier Li said, listen, enough is enough. And I think that's near-term pain for probably long-term gain.
So you've got to separate the China credit story from EM credit. That I understand, Mike. But for many people, they've used the EM trade as a derivative as a stronger China economy. Are you saying there should be a little bit more nuance than that?
I do think there should be more nuances. Think about broader EM at the moment. We've had defaults in Argentina. We've had defaults in Ecuador. We've seen Lebanon default. We've seen South Africa downgraded. These are all major economies that are seeing either defaults or downgrades occur, regardless of what's going on with China, regardless of support from the Chinese economy over the last several years. They haven't been able to stave off defaults and downgrades in other areas of emerging markets. Think about it from the coronavirus crisis that we're seeing today. China has a much better handle on COVID than the rest of EM and arguably even developed countries like the United States. And so as we think about sort of differentiating between China and the broader emerging market universe, I think you have to acknowledge that, yes, in the past, what has been good for China has been good for EM. And in the future, that also may be the case. But for the time being, we're not seeing that really flow through.
Mike, I want to finish on this, looking out to next year. Almost the end of November. Naturally, we've already established a pretty sizable consensus on the outlook for 2021. Vaccinations start. Global synchronized growth starts to come through. That starts to bleed into the equity market. International outperforms. You get a weaker dollar in the mix as well. Mike, are you comfortable with how strong that consensus is right now?
Yeah, I mean, I think there is something to be said about the consensus trade. I think, near term, you certainly are probably going to see bouts of weakness followed by bouts of strength. I think, in the rates market, what we've seen is generally speaking, the rates market look through to further growth, similar to what equities are doing at the moment with small caps and sort of the rotation trade into value. I don't think we're in the clear, though. And as an investor, I still think you should be balanced. At RBA, we currently manage a pretty balanced portfolio across both fixed income and equities.